In London, and here are your top stories. Turkey's election looks like it is heading for a second round of voting, as neither President Erdogan or his main rival get the minimum 50% needed to declare victory. The lira weakens. President Biden and House Speaker McCarthy plan to meet tomorrow as debt ceiling negotiations appear to gather momentum. Global equities move higher. And Ukraine President Volodymyr Zelensky meets UK Prime Minister Rishi Sunak in London today after receiving promises of military support from Italy, Germany and France over the weekend. Let's check in on these futures. Geopolitics very much front and centre with the elections coming through from Thailand, Turkey, of course, and the Ukrainian president meeting with the UK Prime Minister later today. The futures pointed to gains of 0.4% on some gradual movement, it seems, in terms of those debt ceiling talks. Here in the UK, the FTSE 100 currently just edging up slightly. It's worth recapping the consumer sentiment, at least the inflation expectations out of the US, just edging higher. And that really sets us up in terms of the Fed speak later this week and what we expect to hear from those officials. How much pushback from the narrative that you may get cuts coming through by the end of this year. The FTSE 100 currently gaining 30 points, up 0.4%. Over in Spain, gains as well of around 35 points on the Spanish IBEX, gaining 0.4%. And so far, in the first few seconds, a decent session for the CAC current over in France, gains of 0.4%. Switch it over and see what's happening cross-asset then. In terms of the yields edging up at the front end, you saw that fairly pronounced, about 10 basis points on Friday out of the US. The 2-year currently at 3.98, so just back below that 4% level. The futures, in terms of those equity markets, pointing to gains of 0.3%. Across the month, by the way, you're essentially range-bound, flat across those US equities over the last 30 days. And European equities are bumping between about 455 and 465. Whether they can break out of that, of course, is going to be dependent on a number of these headwinds and potential risks. Euro dollar 108, so coming back below that 109 level, but again in the session of about 0.2%. And gold is in focus for us today. On the back of this MLive survey, investors telling Bloomberg this is the asset of choice, is those debt default risks get worse from here. At 2,000, comfortably above that 2,000 level currently for the yellow metal, gains of 0.3% for gold. And of course, that will also be tied to what we hear from those Fed officials. Checking in on the Borsa over then in Istanbul, a drop there of 6.4%. The uncertainty over the next 2 weeks as we expect to go to that runoff. Erdogan having a slim lead. We're going to get the latest now on crossover to what is happening on the ground. But that is the equity market reaction just on the back of that news and the uncertainty. Some traders telling Bloomberg that this is the worst of outcomes so far. Now, Turkey's presidential race does look set to go to that second round of voting. President Recep Tayyip Erdogan is in the lead, but has not reached the 50% threshold needed for a decisive early win. Bloomberg's Yusuf Gamaladin is Istanbul to be covering this story for us. Yusuf, where does this leave then the country at the moment?
Well, Tom, there's a lot to factor in here. I mean, the sun might have broken out of the clouds and, you know, some of the regular activity from fishermen to a lot of the kiosks selling meat are back online. But there's still a lot of soul searching after the pollsters got it wrong. Clearly, the equity market was positioned as well for a different outcome. The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform with 49.4% of the vote, 99% of the vote counted, takes us to a second round potentially on May 28. The key thing to remember is that Erdogan is actually going to be in a stronger position for round 2 than he was in round 1. And that is because the parliamentary numbers speak in his favor, and the third contender for the vote, which is Sinan Olgan, who had 5.3% of the first round vote, those votes need to get reallocated in the second round. And the thinking on the ground is, based on the conversations I've had with many experts, is there is a higher chance of those votes going to President Recep Tayyip Erdogan. So that leaves us in a situation where there's a growing likelihood that we can see more of the status quo, even though the economy is reeling and bursting at the seams in terms of pain and trauma, in terms of flows.
So, Yusuf, how are we thinking then about market reaction as we look ahead potentially to 2 weeks of volatility out of Istanbul? We checked in, of course, in the equity market reaction. You say that they were probably priced around the polling. And as you rightly point out, the polling seems to have come in dead wrong at this point. The market reaction then over the next few weeks, Yusuf?
Yeah, so there are a few fronts that we're keeping an eye on. I mean, you have the equity front, which we'll continue to monitor over the next few hours. Dollar lira was always going to be a tricky one. It's, you know, a little bit short on liquidity. And at the same time, the central bank, I mean, this is, again, based on some of the reporting that we've done, people familiar with the matter, the central bank has already intervened and is going to continue to micromanage that. So what you're seeing in dollar lira, yes, it's a 2-month low, but it's not really the full scale of the pain. And then on the other side of that, on the credit default swaps side, we saw a move higher by about 70 basis points. That gives you a bit of an indication that there is concern about this lingering uncertainty over the next 2 weeks. And then if President Recep Tayyip Erdogan continues to reassert and establish himself for another 5 years, so you're looking at a total term of 25 years, a quarter of a century, what does that mean for an economy that just can't handle unorthodox economic policies anymore? I was just catching up with OMG Capital Advisors. He was talking about the possibility of a balance of payment event, and that the foreign reserves have just been completely run dry. There's nothing anymore to fire in this market beyond a few weeks. Tom.
Okay, Yusuf, great reporting. Thank you for us, of course, live in Istanbul on such a consequential vote for the people of Turkey globally as well, in the region. Let's get back to what's happening in the politics of the US. President Biden says debt ceiling talks are moving along. The US president is set to meet with Speaker Kevin McCarthy and other congressional leaders tomorrow. Bloomberg's latest MLive Pulse survey looks at what investors will buy if the US hits the debt ceiling.
Now is probably not the absolute best time to jump in.
It comes right down to the wire.
As we get to the 11th hour, the volatility spikes and equity markets can correct.
Markets get volatile, maybe the stock market go down.
You don't want to position and, add to equities right ahead of that.
The only way we can play this is to stand back, be careful.
Buy a 1 month, 2 month treasury bill.
There is a huge flight to safety.
A lot of defensive sectors look high priced. Safety trade has become big tech again.
Investors continue to seek shelter there.
And I'm not sure it's as safe as it looks.
I wouldn't want to try and get too cute around timing my portfolio based on the whims of a handful of politicians in Washington.
Okay, joining us now is Yari Sten, Goldman Sachs' chief European economist. Yari, good morning. Thank you for joining us in the studio. Let's start with the debt ceiling risks then and how that links into your views on the European economy. How would you quantify the risks around the US debt ceiling at this point?
Well, it's a fluid situation, as we just heard. I think significant disagreements remain. Of course, it is something that in principle could lead to a pretty sharp adjustment in spending in the short term. But I think we're also seeing some progress here in terms of the talks. There are more meetings tomorrow. I think we're kind of moving towards a compromise. But I think, as President Biden said, we're not there yet. And so I think markets will continue to focus on this in coming weeks and try to assess how much of a risk this is to the US economy. We think, apart from these risks, things actually look fairly resilient in the US. Of course, the banking stresses are weighing on bank lending, but otherwise, we're actually seeing some pretty good progress towards a soft landing in the United States.
Is it possible, the assumption is that they do get a deal, but that is the assumption at this point, with all the risks embedded in that. Is it possible to model the potential impacts of a US default on the European economy?
It's very hard because we obviously haven't seen this in the past. I think in the short term, it really is about market volatility, spillovers from that into Europe, which of course we are already seeing. But I think the broader driver of the European economy are really going to be the things in Europe, the gas crisis, the issues of reopening in China and the effects on growth here, and then, of course, the tightening process of the ECB. So I think those are really going to shape the European outlook much more at this stage.
Yeah, we certainly want to unpack your views on where the ECB goes from here in the next few minutes. But I just want to start on, or continue along the US lines, around the dollar particularly. It had a very good week last week on some of these geopolitical risks. If we get to a point where the Fed is on pause, maybe a bit of a softer dollar, how does that read across for the European economy and European corporates?
Yeah, I think the euro obviously is one of the very important drivers of the cycle. We have generally seen a significant appreciation of the euro relative to where we were a few months ago. But then again, we have to see it in the context of the long weakening that we saw in the run-up to that. And I think current levels of the euro are still below where you would put a normal exchange rate of the euro against the dollar. So I think there's a slight headwind in the pipeline from the strengthening we've seen over the last few months. But again, I don't think it's one of the key drivers at the moment. I think inflation that's falling, China that's reopening, credit that's tightening in Europe, I think those are the more important drivers right now.
Is China, to what extent is China a disappointment for Europe, given the expectations around the demand impulse? We've seen, for example, new yuan loans, the credit demand out of China being much weaker than many had expected. The drive, the catalyst from China for Europe as an economy, is it less than many had expected, or is there movement, is there generation, is there development that's going to come through in the second half from China?
Yeah, it's a little bit early to say because the numbers in China, of course, have been very strong, but at the same time, it's mainly services driven, and we know that the spillovers from stronger services activity are smaller than from traditional industrial activity. And as a result of that, the industrial data in Europe over the last couple of months have actually been pretty weak, and we had big downside surprises in the German industrial data, for example. So we still think there's some positive spillover to come. It typically actually takes 3 to 4 months from stronger activity in China to spill over into Europe. But I would say it is a little bit of a puzzle at the moment why the European industrial data has not been stronger, given the very strong data in China. Now, what is encouraging is that the services activity in Europe is very firm. And I think that links back to inflation starting to come down, gas prices down, consumers still have a lot of savings. And so we're still constructive on European growth, but a bit more because of the strength in services rather than the industrial side.
Yeah, that's interesting. And in some of those European economies, the divergence between services and manufacturing is quite pronounced, isn't it? But Yali, great to get your thoughts. We're going to get you to stick around. We'll get your views on the ECB, how to manage some of these risks, and where that rate hike trajectory goes from the European Central Bank just in the next couple of minutes. Yari Sten, of course, of Goldman Sachs, staying with us. Just a redhead crossing the terminal, a couple of lines coming through. One in terms of deal-making, or deal-making that isn't happening. This is Wood Group here in the UK. Apollo deciding that it's not going to make an offer for Wood Group. You can see its shares falling. Look at that, close to 40% on the back of that decision. This is John Wood Group. Apollo Management Holdings said it doesn't plan to make an offer for the engineering services company, so ending a long-running takeover attempt, of course, by Apollo, and the stock of Wood Group taking a big hit in the session this morning. And then, of course, we're monitoring those shares, those companies that have exposure to the Turkey story. We saw the benchmark over in Turkey taking a big hit, falling around 6%. On the back of the news that it's likely that vote to go to a second round, the uncertainty around the politics of Turkey. BBVA, the Spanish bank, of course, with the linkages to Turkey and the impact there, currently down close to 4% on the back of that story. We keep across, of course, the developments in Turkey and the broader implications throughout this hour. Coming up, economists give their forecast for the ECB rate path, and it looks like it is higher rates for longer amid sticky inflation. We get the Goldman Sachs take in the next few minutes. This is Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Season is here.
Earnings season is in full swing.
UK consumer is still strong.
Bloomberg breaks the numbers first.
UniCredit smashing the earnings.
Underlying sales up by 10.5%.
Volkswagen, BMW.
Deutsche is on fire.
With exclusive expert analysis.
The first quarter was very challenging.
Do you worry about the supply chain?
I'm really pleased with the quarter's results.
What's your timeline for this actually being able to reach market?
Our business remains very resilient.
The overall performance has been stellar.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back. Economists polled by Bloomberg expect the ECB not to cut rates until the second quarter of 2024. They say the Euro area central bank will hold rates at their peak for longer as inflationary pressures persist. Yari Stenner, Goldman Sachs, still with us. Yari, give us your update then in terms of how far the ECB is going to have to go. How many more hikes are in the pipeline, and what is that going to do to the Eurozone economy?
Yeah, so they slowed down to 25 basis points as was expected, and basically said there's more ground to cover because inflation is still too high. There's still underlying pressures in the labor market that are building, and growth is more resilient than we thought. And so to us, it means that there are 2 more rate hikes coming. So we have another 25 in June, another 25 basis point hike in July to 3.75%. And then we think they will sit there for a while, actually for quite some while, until the end of 2024, because we think these underlying pressures are still too elevated for them to turn around very quickly and cut.
To be clear, you think they said at 3.75 until the end of 2024?
That's the base case, yes, because we still have a very tight labor market. Wage growth is still accelerating, and I think what is interesting in the euro area is that the institutional wage setting setup essentially means that the wage pressures tend to be more persistent than, for example, in the US, where wage growth accelerated earlier but has already slowed quite a bit now. And so we think core inflation is still going to remain above the target for quite some time, not giving them essentially enough.
What does 3.75 for the ECB until the end of 2024, what does that do to the Eurozone economy? Where are the vulnerabilities in that kind of scenario?
Yeah, I mean, near term, of course, it is leading to significant tightening of credit conditions, and that is going to slow growth in coming months, particularly via the housing market, via interest rate sensitive parts. But then, of course, once you have adjusted to the rate level, the drag should start to diminish. And we also have some positive things in Europe, the big drop in headline inflation that's coming that should support consumer spending. There's still quite a lot of saving in the economy. And so we think there's quite a bit of resilience in the economy despite these rate hikes.
Are you starting to see, or when do you expect to see, a material and sustained breakdown in core inflation?
Well, we think we've started to see the beginning of it. I mean, we had the first time a small tick down in the year-over-year core inflation rate, and we think that decline will continue, particularly as goods prices cool. And that's, of course, something we've seen in the US, something we've seen globally. The key concern really is around services inflation, which is tied to wage growth, which in turn is tied to the strength of the labor market. And we think that part of inflation will be stickier, and therefore it will take some time for core inflation to go down. So we do have it falling for sure, but it is falling relatively gradually, and it's still above 2% for quite some time in our forecast.
Switching focus to the UK then, does the Bank of England have a credibility problem at this point, given that dramatic revision in its growth forecasts for the UK, the biggest revision that we've seen since 1997, when of course it gained its independence?
Yeah, I mean, it was a very big revision, 2.25%, the level of GDP, the biggest ever. But of course, the forecast had also been out of date in terms of the assumptions that had gone into that. Central banks, of course, only do quarterly updates to their forecasts, and gas prices had fallen a lot. The rest of the world had turned out to be much more resilient, and so that forecast made a lot of sense. It had been out of date. They moved closer to our forecast. They moved closer to the consensus forecast. I think the other takeaway from the meeting was really that they're still saying we're evidence-based, we're data-dependent, we're not really giving you a steer where we're going next with rates. We ultimately think that the economy is still resilient, that you're still seeing strong underlying price pressures, and that the bank probably will do another couple of hikes. So we have them going to 5% in an effort to really cool the labor market and the inflation pressure sufficiently.
Okay, always really smart. Yarish Sen, thank you for joining us in the studio this Monday morning with a view on 5% for the Bank of England and 3.75 into the end of 2024 for the European Central Bank. Yarish Sen, of course, Goldman Sachs chief European economist. Let's get the Bloomberg Business Flash now with Sarah Hall. Sarah.
Hi, Tom. Gold giant Newmont has agreed to buy Australian rival Newcrest Mining in a deal worth about $19 billion. The transaction sees Newmont consolidate its position as the world's biggest producer of bullion, with mines across the Americas, Africa, Asia, and Australia. It comes as global gold miners are facing the prospect of stagnating production and rising input costs. The UK and Switzerland are kicking off talks for a new free trade agreement to boost ties between the two nations. Trade Secretary Kemi Badenoch is set to meet her Swiss counterpart in Bern today, with formal negotiations due to begin next week. The prize for the two sides is a reduction in trade barriers in areas like finance and legal and professional services. Vice Media has filed for bankruptcy protection, punctuating a rapid decline for the media upstart that once boasted a valuation of more than $5.5 billion. It follows a tumultuous few months for the company, with its flagship TV news show taken off the air and more than 100 staff laid off last month. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Tom.
Sarah Halls in Dubai, thank you very much. Coming up, we're going to get the stocks that are moving this morning, including Wood Group. That's as Apollo says it does not intend to make an offer for the engineering company. Stay with us. This is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customers like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open. We are 24 minutes into the European trading day. Modest risk on across your European equities of 0.2%. Futures in the US also pointing out by around 0.3% on the S&P E-minis. Let's get to some of the individual stocks on the move and bring in Joe Easton. Joe, you're starting with BBVA and the Turkey story.
Morning, Tom. So Wood Group, we're starting with BBVA. So BBVA, the Spanish bank, they do have a 15% exposure to Turkey in terms of their holding in Garanti Bank. So they own a 85% stake in Garanti, and all the Turkish stocks are down today because of the potential runoff vote over in Turkey, which could potentially be a big risk for Erdogan. Now, markets don't like the uncertainty there, and we're seeing a lot of those Turkey-exposed stocks falling. We've also got a bank over in the Middle East getting hit, and DFDS in Denmark. We can see on the screen there, BBVA down 3.9%.
The political risk there coming through from Turkey for BBVA. Look, you were right, you were on the money, Joe. We went to kick off with Apollo Group and what's happening with the Wood Group. Wood Group not managing then to engineer a deal with Apollo. Engineer. See what I did there, Joe?
Exactly. Very good there, Tom. So Wood Group, as you say, getting absolutely slammed today, down 35%. We can see it on the screen there. By far the worst performing stock in Europe today. Apollo saying they won't make a bid for the company. Now, they did previously bid 240 pence per share for Wood Group. Wood Group rejected that. We can see it's wiped all of that rally today, the worst performer we've got this morning.
Joe, what's happening with Currys?
So Currys going the other way, up at around 6% last time I looked. Now, they are saying that the UK trading over the past 2 months has been better than expected. That stock gaining around 6%. It's a bit of a bellwether in the UK, given it has 289 stores. So we're seeing a bit of strength in some other UK retailers as well. That one is positive.
All right, Bloomberg's Joe Easton with the stocks on the move this morning. Thank you. Coming up, going for gold, Newmont further cements its position as the world's biggest producer of bullion. That's after acquiring its rival Newcrest. We get the details next. This is Bloomberg.
things that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and then it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open. We're 30 minutes into European trading day. Here are your top stories. Turkish stocks slump, triggering a circuit breaker as the nation's election looks set to head for a second round of voting. The lira weakens. President Biden and House Speaker McCarthy plan to meet tomorrow as debt ceiling negotiations appear to gather momentum. Global equities move higher. And Ukraine's President Volodymyr Zelensky meets UK Prime Minister Rishi Sunak in London today. That's after receiving promises of military support from Italy, Germany and France over the weekend. So geopolitics front and centre for us today. We're expecting Fed speakers out later this week as well to give some mood, some commentary in terms of where the Fed goes next across those European or US stocks, by the way, still essentially flat for the 30 days, the recent 30 days. We'll see if the futures spell out further upside. As it seems, at least at the staff level, there's a bit of momentum in terms of these debt ceiling talks and whether or not that really picks up pace. Across the European equities then, the benchmark is gaining 0.3%, so a little bit of optimism coming through for European stocks. Again, been range bound for the last 30 days, 30 to 50 days, around 455, 465. If you can break out and get through to 470, that might be indicative of more optimism for European equities. But all the headwinds, of course, there is a need, arguably, for a bit of a catalyst. The DAX currently gaining 0.3%. The FTSE 100 up 22 points, getting 0.3%, despite the drag that's coming through on energy. Across the sectors then, there's energy at the bottom of the list, down 0.4%. Oil under pressure for a fourth straight day on those recession concerns, on those slowing growth concerns, particularly out of China and the US. Chemicals also down 0.2%. Across the top, though, consumer and products, travel and leisure also gaining 0.5%. Insurance higher as well by 0.4. That's the sector breakdown. 30 minutes into the trading session this Monday morning. Let's focus on deal making now, though. Newmont has agreed to buy Newcrest in a deal worth over $19 billion, consolidating the US miner's status as the world's biggest gold producer. Let's bring in our deals and banking reporter, Harry Brumpton then. Harry, shares closed Friday about 3% off the implied deal price. So did investors expect that this deal was going to be solidified?
Yeah, largely. There had been some question marks pop up. I mean, Sherry Jew told us the CEO of Newcrest told us in an interview just a few weeks ago that the board was ready to recommend a deal, which was, news at the time. However, they did extend due diligence last week, at the tail end of last week, and that raised a few question marks going into this, but it was really just to buy a bit more time. So, there's surprise to the upside. There's also a bit of a pleasant surprise for shareholders there in a franked dividend as well, which is essentially a tax-free dividend they can get before the deal closes. That should be a happy reward for those who've stuck with it so far as well.
Yeah, indeed. So, Harry, talk to us about the rationale then, the rationale for Newmont to add this scale.
Yeah, there's a lot in there. I mean, essentially, there's almost a kind of existential crisis in the fact that there's not many mine sites or assets out there that are capable of or have reserves of 10 million ounces left. It's really hard to find that, and it's not getting explored. And on top of that, there's geopolitical crises. People kind of getting more and more worried about exotic locations where they used to be more than happy to sign deals just a few years ago in places like Africa or South America. So as things get a bit more shaky globally, and then on top of that, you're going to need to be finding more high quality jurisdictions that actually have output as well and are bringing it up to scale. Newcrest has all that, and they have about 60 million ounces, so at least in reserves. So purely on a reserves basis, let alone ongoing production, they're really up there. And on top of that, they've kind of got a real touch in terms of some new technologies that really help extraction from existing mine sites as well. Their Cadia and Lihir assets are big assets for them, and they've done really well in areas, some fairly technical areas called underground block caving, flotation extraction, some pretty novel techniques.
All right, really excellent context. Harry Brunson in Sydney on the back of this huge deal, a mega deal within the gold sector. Thank you. Let's check back in on Turkish stocks then, the reaction then across these equity markets in Turkey to the news that the vote is likely, at least voting is likely to go to a second round. So losses there of a little under 5% after trading was briefly suspended. Of course, the news that Erdogan has a slim majority at this point, but not enough to get above that 50% threshold to prevent a second round vote. At least that is the latest coming out of Turkey, and some traders saying that we are set for a very volatile 2 weeks, some describing this as the worst of the potential outcomes, at least the views of some market participants. You can see equity is currently down 5% over in Turkey. We'll keep across that story for you, of course, and get the latest in just the next couple of minutes and the implications for Turkey and within the region. Now, let's get the first word news with Sarah Hall. Sarah.
Hi, Tom. Pro-democracy parties have scored a resounding victory in Thailand's parliamentary election. With 99% of votes counted, the Move Forward party is ahead in total seats and in the popular vote. The party advocates change in a law that restricts criticism of Thailand's powerful monarchy. The result is the biggest challenge to the royalist-backed establishment since the military seized power in a coup nearly a decade ago. Ukrainian President Volodymyr Zelensky is reported to have arrived in London for a surprise meeting with Prime Minister Rishi Sunak. The visit comes after France promised to provide more support to Ukraine following a meeting between Zelensky and President Emmanuel Macron. Zelensky's weekend tour also took in visits to Italy and Germany. Indian Prime Minister Narendra Modi has conceded a loss in the southern swing state of Karnataka. Rahul Gandhi's Congress party scored a rare victory, taking 60% of seats in the state Congress, its biggest win against Modi's BJP since 2014. The winning party's campaign included promises of direct cash benefits for women and free electricity. G7 finance chiefs have concluded their meeting in Japan by presenting a united front on more support for Ukraine. And while China didn't get a direct mention in the group's statement, there were thinly veiled plans to counter Beijing's dominance of global supply chains. The G7's unity comes in stark contrast with the discord seen at G20 in India less than 3 months earlier, which ended without the usual communique. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Tom.
Sarah Halls in Dubai, thank you. Coming up, Turkey heads for a second round of voting. We're going to get the latest election news next. Some analysis. We are live in Istanbul. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
Welcome back to the Open. 40 minutes into the European trading day. Some upside coming across European equities of 0.2%. Futures in the US also high by 0.3. The dollar is down, and treasuries, US treasuries, are largely unmoved so far in the session. Let's get to what's happening then on the ground in Turkey. The presidential race there will likely go to a second round of voting in 2 weeks. That's as President Erdogan falls short of the 50% needed for a decisive first round win. Let's get back out to Yusuf Gamaladin in Istanbul. Yusuf, what is the latest update then in terms of the market reaction to this news?
Well, Tom, let me get you up to speed because initially out of the gates on the equity market, so local stocks hit a circuit breaker where we're down a little bit over 6%. We're back online now and clawing back some of those losses, still around 5% intraday. Look out for some of the banks who are getting hit hard. In the run-up to round 1 of this vote, we had a rally in Turkish stocks around 10% of the last 5 trading sessions. So clearly the market was completely mispositioned around the potential outcomes, and that is getting corrected. It's also getting corrected in corporate bonds. Those are coming under pressure. In the dollar-lira trade, always a bit of a difficult gauge because of the lack of liquidity and the constant intervention of the local central bank. Still holding relatively range-bound, but further losses are anticipated if current economic policies are going to be the way of this government, assuming, of course, President Recep Tayyip Erdogan is able to cement his position. Also look up for those credit default swaps, marginal repricing there as well, Tom.
Okay, excellent. Yusuf Gamaladin in Istanbul for us in terms of the market reaction to the political events unfolding. Let's get more analysis now with Evren Bolta, Professor of International Relations at Özyeğin University. Professor, thank you for joining us this morning. Is the momentum now with President Erdogan?
Sure, it is. I mean, President Erdogan got 49%, almost 49% of the votes. And the People's Coalition candidate Kemal Kılıçdaroğlu got the 45% of the votes. So if there is going to be a second round, President Erdogan definitely needs less votes to support him to win the majority in the elections. So the momentum is with him, I guess.
And there's a third-party candidate who has been compelled to drop out with the votes not coming in high enough. Where do the votes of the third-party candidate come through? Do they end up then backing Erdogan or his opponent?
Sinan Ogan, the third-party candidate, got the 5% of votes, and we don't know for sure that who is going to be backing up in the second round. But Sinan Ogan is more on the nationalist front and secular and nationalist. And the likelihood of maybe half and half or maybe most of the votes going for President Erdogan, supporting President Erdogan. It's not clear right now, but it seems that the fact that President Erdogan needs less votes to get the majority gives him a clear advantage in the second round, I guess.
Market participants are telling us that they're expecting a very volatile 2 weeks ahead of that second round vote. How fraught do you expect the next 2 weeks to be?
In terms of politics of Turkey, I don't think the next 2 weeks is going to be as competitive as we have been witnessing in the last 2 weeks. So I'm not expecting any sort of political turmoil. Definitely, Nation Alliance is going to be, still will be in the race and will be pushing for the majority still. They're not going to drop out. They're not going to drop out their ambition to win this election. But I don't think there's going to be a political turmoil in Turkey in the next 2 weeks.
Do we have a clear sense of what President Erdogan's economic priorities would be should he win this second vote and be reconfirmed as president of Turkey?
Well, economy is on the top of Turkey's agenda, and it's on the top of Turkey's agenda as well. And in fact, the foreign policy of President Erdogan has been basically shaped by this economic rationale. And he's going to be some sort of revisitation of the unorthodox economic policies that he has been following. We have seen some signs of that, but it seems that there's not going to be a radical change in the way that Turkey has been conducting its economic policy. But there may be some changes in the way that how Turkey has been conducting its foreign policy. And foreign policy is going to basically be responding to the economic rationale more and more in the next 5 years if President Erdogan wins.
Would a win for Erdogan be a win for Vladimir Putin, or is it more nuanced than that?
I think it's more nuanced than that. As I said, the top priority of foreign policy will be economy, and Turkey cannot forego Russian energy in the short term. And there is this really asymmetrical dependency between Turkey and Russia in terms of energy, and that President Erdogan has to follow in this term as well if he wins again. 44% of Turkey's domestic consumption comes from Russian energy, Russian resources. So that's going to continue. But we do know that President Putin's favorite candidate in this election was President Erdogan. They had a working relationship for many years right now. Turkey, under President Erdogan, had a working relationship with Russia in Syria, in many regional conflicts. And in fact, Turkish trade with Russia has been on the rise in the last year as well. So we may see this trend to continue, but there definitely needs to be a nuance because Turkey's trade partner is still the West, is still the European Union. And given that economy is going to be in a very dire condition in the next years to come, President Erdogan has to strike through a very delicate balance between the West and Russia, I would say.
Indeed, and that comes down to how Turkey is positioned within that NATO alliance. Do you expect further friction on that front, or will there be outreach from Erdogan to his NATO partners? For example, allowing the ascension of Sweden into that alliance, or is there a potential for breakdown between Turkey and its NATO allies in the months and weeks ahead?
I think President Erdogan has been trying to create a movement of rapprochement with its Western allies in the last year. Foreign policy, on the foreign policy front, President Erdogan has been on the path of normalization of relations with its regional allies as well, within the region as well. So I would expect this path of normalization to continue in the next year. And in terms of the Sweden's NATO membership, as you may remember, as President Erdogan announced, he intentionally postponed it after the election. And I think that this membership is going to be on the negotiation table for some time, depending on Turkey's wishes from the Western Alliance or negotiations with the US in terms of the purchase of F-16s and many other things. So I think it's going to be on the table for some time, but we will definitely see sort of a more normalization of Turkey's foreign policy, both with the West and also in the region.
Okay, interesting. And Professor, before we let you go, your expertise, obviously, in terms of the politics of Turkey and international relations, I just want to take it back and see how we can link that into the market reaction. Investors are clearly not happy so far with the result and the prospect of a second round vote. Do the unorthodox policies, particularly around the central bank of Turkey, do you expect those to continue under a rejuvenated Erdogan, if indeed that is the result that we get?
I think, I mean, I'm not an economy expert, but I think the unorthodox economic policies of some sort, maybe not as radical as we have been witnessing in the last year, is going to continue. I'm not expecting a radical change, in fact.
Okay. Evren Balta, Professor of International Relations at Özyeğin University. Really appreciate your analysis, your insights this morning, of course, on the back of a consequential vote in Turkey. And as you look ahead to the potential in 2 weeks' time of a second round vote. Coming up, Ukrainian President Volodymyr Zelensky stops by London today as he continues his European tour. We bring you the latest on that next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Back to Bloomberg Daybreak Europe.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open, 53 minutes into the European trading day. Gains of 0.2% across European equities. Futures in the US also pointing higher across your sectors. Bottom of the list is chemicals and energy, down around 0.2%. But consumer products are topping the list in terms of your sectors, gaining 0.8%. Basic resources also up 0.5. Let's take a look at what we're focusing on this week. On Monday, we get Eurozone industrial production figures, so in a little over an hour time at 10 a.m. UK time. Then later in the day, the BOE's Hugh Pill speaks about the cost of living crisis in the UK. Anything he says about wages, of course, and inflation will be important. Then on Tuesday, we get UK jobs data and US retail sales a few hours later. Is the strength of the consumer in the US still holding up? On Wednesday, we get the latest Eurozone inflation figures. Also, BOE Governor Andrew Bailey speaks at the British Chambers of Commerce event. And Thursday, the Mexican Central Bank announces its rate decision on Friday. The G7 summit kicks off in Hiroshima. If the US president makes it, that may signal movement and further momentum in terms of these debt talks. Let's get back to what is happening in terms of the war in Ukraine and Volodymyr Zelensky saying he's going to meet with UK Prime Minister Rishi Sunak in London. That is going to happen today. The Ukrainian president has been on a European tour over the weekend with stops in Italy, Germany and France. For more, we go to our Europe correspondent Maria Tadeo in Brussels. Maria, a big diplomatic push then from Zelensky. What does he aim to get out of it? How much has he achieved in these last few days?
Yes, Tom, and it's not over because he is going to London next. If you look at the European tour this weekend, you look at the stops in Italy, Germany, and France, to me, there's two real takeaways from this. One, of course, is that big package that was announced on Saturday by the German government. Remember, 2.7 billion euros in new weapons for Ukraine, and a very telling interview on Saturday on Italian TV from the Ukrainian president, who repeated his line, he does not see the point of talking with Vladimir Putin. It is about the counteroffensive. Now, when you look ahead to the meeting today in the UK with the UK Prime Minister, it is no secret that the government of the UK has a lot of aggressive language when it comes to Russia, a lot of bravado. The Ukrainians love it, but obviously they love the weapons even more. And a lot of that conversation will feature on potential new weapons that could go Ukraine's way. Remember, they have talked about the fighter jets for months now. The other point, which I presume has come up across Europe and will come up again in the UK, is the idea of NATO. Remember, Tom, there is a very important, I would dare say, NATO meeting that will happen in Vilnius in Lithuania in July. The Ukrainians have asked repeatedly that they want to see not just a vague promise that one day the country will join NATO, but actually a roadmap to membership for NATO. This is a controversial topic, as you know, Tom, because some fear that a country at war against Russia to be given that kind of promise and a timeline could escalate things further, but that is a political aspiration of Ukraine, but also of some of the Eastern European countries like the Baltics, like Poland, who say it is about time this country gets some clarity about its future, not just in the EU, but also NATO.
Okay, Maria Tadeo on the ground. We have the China lines as well, the China elements. We'll get Maria's thoughts on that, I hope, later this week. Running short of time, though, and whether or not the China peace plan has been sidelined by this diplomatic activity from the Ukrainian president. Our European correspondent, of course, Maria Tadeo on the ground in Brussels around Zelensky's visit now in the UK, expected to meet you with UK Prime Minister Rishi Sunak in the next few hours. That is it for the European Market Open. Surveillance Early Edition is up next. European stocks are gaining 0.2%. Futures in the US also pointing high by around 0.4% on the S&P E-minis, 0.3 on the Nasdaq future. The dollar is slightly softer. We continue to focus on Turkish assets. Stay with us. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. a lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, probably I try and play that role.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. Turkish stocks resume trading after a circuit breaker as the nation's election looks to be heading for a second round of voting. The lira weakens along with European stocks that have exposure to the country. President Biden and House Speaker McCarthy plan to meet tomorrow as debt ceiling negotiations appear to gather momentum. Global equities move higher. Plus, Ukrainian President Volodymyr Zelensky meets UK Prime Minister Rishi Sunak in London today after receiving promises of support from Italy, Germany, and France when it comes to the military over the weekend. A quick check on the markets this morning. We are getting some breaking lines when it comes to the EU Commission. Is that going to move the euro here? They have raised their Eurozone inflation and GDP forecast for this and next year. The inflation forecast for 2023 is now at 5.8%. It was at 5.6%. For 2024, it goes to 2.8 from 2.5%. And the forecast for GDP for this year is at 1.1%, 1.6% for 2024, saying that downside risks to the economic outlook have indeed risen. Well, the euro is stronger this morning. Overall, we are seeing some dollar weakness. There has been that Pavlovian urge to buy the dollar over those debt ceiling fears, over just general economic fears. Some of that waning out this morning. Does the dollar downside continue once again? The dollar is, of course, much stronger versus the lira so far this morning. Now, we are looking at a 10-year yield that moves higher, up 2 basis points. That flattening in the curve has been happening since Friday when we got the UMich survey. Again, inflation concerns, that being entrenched, is really rife throughout these global markets. That's what UMich showed us. Perhaps that's what these European Commission figures are showing us too. Gold has been the winner when it comes to the debt ceiling debates. That's according to our latest MLive poll survey. Gold ranked highest is where you want to hide out. Now, overall European indices, those are moving higher this morning, up 0.2%. When it comes to the regional breakdown, you are seeing some outperformance in France. Consumer goods, those outperforming this morning. FTSE 100, that's up about 0.3%. So most of these regional benchmarks heading higher. Now, Turkey is likely heading for 2 weeks of political uncertainty after both President Erdogan and his main opposition rival failed to win a majority in the country's election. The latest results show Erdogan leading the vote, but short of the 50% needed to avoid a second round. Let's go to Bloomberg's Yusuf Gamaluddin, who's in Istanbul. Yusuf, you spent the morning talking to experts about this election. What's been the reaction so far to the results?
I mean, a little bit of a sense of surprise, Danny, because remember the pollsters going into this had expected Kemal Kılıçdaroğlu to really do a lot better than he eventually did in round one. Based on preliminary results, he trailed the incumbent President Recep Tayyip Erdogan, and it raises further questions about where it leaves the challenger for the second round, because the reality is that a lot of the followers of Sinan Oğan, who got 5.3% in round one, those people, for the most part, are likely to vote for Recep Tayyip Erdogan if it came down to it, if they had to make a decision. And so President Recep Tayyip Erdogan, perhaps ironically, in round two is in a better position than he was in round one. Adding to that even further are some of the initial parliamentary results that give another tailwind to the incumbent. But ultimately, it raises bigger questions about the longer-term trajectory of economic policy. We're seeing the markets fierce repricing on quite a few fronts, Danny.
Yeah, get more into that, Yusuf. What have we seen in terms of market reaction?
Well, on the equity side of things, we hit the circuit breaker initially. The banks selling off hard. Now we're giving back some of the initial losses, but what I would look out for are some of the bond losses as well. Corporate bonds are selling off. At the same time, you're seeing the overnight funding rate for liras surge by about 400%. And then the other thing that's come to light are the credit default swaps. Remember, dollar lira isn't always the best proxy to understand investor positioning. You know, there is quite a bit of intervention from the central bank. The CDS is on a 5-year basis, telling you a story of 600 basis points, the highest level since March 21. And this is a warning signal from the market, which had been positioning for what is widely considered a market-friendly outcome. The initial results we have clearly are not that, and this is what the market's telling you. Danny.
Yusuf, thank you so much for your coverage throughout today. Bloomberg's Yusuf Kamaldin in Istanbul. Now to another election in Thailand where pro-democracy parties have dominated the parliamentary election. The results set up the biggest challenge to the royalist-backed establishment since the military seized power in a coup nearly a decade ago. Let's go to Bloomberg's Asia Markets editor, Margot Towie in Bangkok. Margot, just how significant is this result for Thailand?
It's very significant. It's surprising in the number of votes that went to the opposition parties, two in particular. Both were expected to do well, but not as well as they did. So that's the big surprise, and it really is a step back for the military-backed parties that have ruled Thailand for almost a decade now. Where they go from here, where the military goes from here, remains to be seen. But the two opposition parties are talking already about forming a government. They're also in talks with some other smaller opposition parties with the hope of forming a coalition, which they need. Neither of them can serve a government in their own right. One of the hurdles that they face, however, is a Senate that was appointed by the military junta. And that will have a say in who is appointed Prime Minister. They will have an equal vote to the members of the lower house of government. So that remains to be seen. We're not out of it yet. There'll be some weeks of negotiating and horse trading, no doubt, before we see the formation of a new government.
So what does it mean for investors in the meantime as we wait for the new government and potential next steps after that government forms?
Typically in Thailand, you don't see a lot of reaction from investors to political changes, and the reason is that the policies typically don't change that much. In this election, there's been a lot of promises of pump priming, of consumers, particularly so people can pick up spending. So you have seen, and you will see, imagine, a pickup in some of the consumer-related shares. Banks may do well, loans and so forth. All in all, it looks fairly good for investors. This morning we also had a good set of GDP numbers out for the last quarter, which bodes well for the year ahead. That said, the hiatus between the election and forming the government means there will be some delay in policy making and spending. So, you know, really overall, I don't really think it will impact investors that much, and that's what we're seeing from analysts. That's their view.
Okay, well, it certainly has been an interesting day for EMFX. Margot, thank you so much. That's Bloomberg's Margot Towie in Bangkok. Coming up, President Biden and U.S. congressional leaders will resume debt ceiling negotiations on Tuesday. We'll discuss more of that next. This is Bloomberg.
Say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in, but I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Has the Fed coverage you're looking for. Today, Bloomberg's Mike McKee sits down with Atlanta Fed President Raphael Bostic.
There are just a lot of things to reflect on in terms of where the economy is.
Then on Tuesday, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook.
And an interview with Chicago Fed President Austin Goolsbee.
We should gather further data.
It all starts today, right here on Bloomberg, your global business authority.
Now is probably not the absolute best time to jump in.
It comes right down to the wire.
As we get to the 11th hour, the volatility spikes and equity markets can correct.
Markets get volatile, maybe the stock market go down.
But you don't want to position and, add to equities right ahead of that.
The only way we can play this is to stand back, be careful.
Buy a 1 month, 2 month treasury bill.
There is a huge flight to safety.
A lot of defensive sectors look high priced.
Safety trade has become big tech again.
Investors continue to seek shelter there.
And I'm not sure it's as safe as it looks.
I wouldn't want to try and get too cute around timing my portfolio based on the whims of a handful of politicians in Washington.
Some of our guests there discussing the MLive Pulse question about where to invest as U.S. debt ceiling talks progress. Speaking of which, President Biden and U.S. congressional leaders are planning to meet Tuesday to resume those debt ceiling negotiations. National Economic Council Director Leo Brainard told CBS that talks are serious and constructive, but reiterated just how serious a default will be. For more, let's bring in Bloomberg senior economics reporter Michelle Damrisco. Michelle, we're still trying to figure out where this game of chicken stands at the moment. Where are we when it comes to this negotiation process?
Yeah, it really is a game of chicken, right, Danny? I mean, it's hard to tell when you've got the political back and forth. That's just such a thick layer over everything, and a sort of blame game that continues on that side while everyone tries to say, oh, we won't default, but, nobody really has that certainty right now. So where we stand is we're all kind of clinging to that hope that the Tuesday meeting between President Biden and Speaker McCarthy actually yield some signs of progress. Now, remember last week when this meeting was delayed, our reporting showed that it was delayed for good reasons, that the staff level talks, especially around energy proposals, around fossil fuel production and some green energy items, those were progressing enough to make a delay happen for the leader level. So now we hope to see more signs of progress tomorrow. In the meantime, we're hearing more from either side that both sides see the other as recalcitrant and not able to kind of close this deal as we approach that June 1 X date.
Well, maybe some of that progress solidifies or justifies some of the lack of reaction from equity markets. Of course, there's been some reaction in T-bills and bond markets, but what is at stake for investors and the U.S. public here?
Yeah, it seems like, a lot of investors probably don't want to put their money where their mouth is just yet, but they are growing in nerves. And I think one thing to point out, especially off of that MLive Pulse survey, is that many investors think that this is worse than previous episodes. Of course, we've been down this road before, unfortunately, but they're seeing it as a more uncertain landscape than we've seen, for instance, in 2011 when we had a similar, challenge going on. So that is at stake. And of course, in the limelight is what happens to U.S. Treasuries. Of course, the Treasury Secretary tried to reassure in some terms with Anne-Marie Hordern in her interview last week that the U.S. Treasury would not default, but at the same time she also could not guarantee that. So there is a huge, and she did warn Yellen talking about an economic and financial catastrophe if they don't pull this through. So of course stakes are very, very high, a lot of uncertainty, and folks on the ground, outside of the investment world, I think a lot of everyday Americans are worried about what happens in the event of default to Social Security payments, to federal government salaries, to daily operations of critical agencies like the Federal Aviation Administration, Customs and Border Patrol. So we could really have a real mess on our hands as we approach that X date.
Once we get through that X date, and hopefully we do, I wonder if we'll kind of turn our attention back to inflation. If this is sort of dominating some of the headlines, but in reality, perhaps what's most worrying for bond markets is a UMich survey where inflation expectations are at a 12-year high.
Yeah, it really is, tough to make that call right now. Of course, we've got still some weeks of data before the Fed meets again. We had been seeing signs of disinflation. Of course, a lot of people pointing to Powell's favorite measure on services ex housing looking pretty good in terms of coming down, or at least moving in a good direction, easing off of highs. So, there are those signs, but yeah, consumer expectations are a whole different ball game, and if people don't feel it, then we could be in a real pickle when consumers are feeling like the prices will just increase, and then that kind of tends to have its own effect on eventual price growth. So a lot more to come on that front. I'm sure we'll be debating that in the weeks to come before the Fed decision.
A debate it feels like we're constantly having. Michelle, thank you so much for joining us always.
Every day.
Michelle Chamrisco, every day in Singapore. Thanks for debating it with us. All right, let's get to your Bloomberg First Word News. With that is Leanne Gerrans. Good morning, Leanne.
Hi, Danny. The UK and Switzerland are kicking off negotiations for a new trade agreement to boost ties between the two nations. Trade Secretary Kemi Badenoch is set to meet her Swiss counterpart in Bern today, with formal negotiations due to begin next week. The prize for the two sides is a reduction in trade barriers in areas like finance and legal and professional services. Now, G7 finance chiefs have concluded their meeting in Japan by presenting a united front on more support for Ukraine. And while China didn't get a direct mention in the group statement, there were thinly veiled plans to counter Beijing's dominance of global supply chains. The G7's unity comes in stark contrast with the discord seen at the G20 in India less than 3 months earlier, which ended without the usual communique. Indian Prime Minister Narendra Modi has conceded a loss in the southern swing state of Karnataka. Rahul Gandhi's Congress party scored a rare victory, taking 60% of seats in the state Congress, its biggest win against Modi's BJP since 2014. The winning party's campaign included promises of direct cash benefits for women and also free electricity. Gold giant Newmont has agreed to buy Australia's Australian rival Newcrest Mining in a deal worth $19 billion. The transaction sees Newmont consolidate its position as the world's biggest producer of bullion, with mines across the Americas, Africa, Asia, and also Australia. It comes as global gold miners are facing the prospect of stagnating production and rising import costs. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Danny.
Leanne, thank you so much. All right, coming up on the program, Ukrainian President Vladimir Zelensky is expected in London today as part of his European tour. What is he hoping to get from his trip? We're going to discuss that next. This is Bloomberg.
We can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Ukrainian President Vladimir Zelensky has just arrived in the UK. That's after he stopped in Italy, Germany, and France over the weekend as part of his EU tour. Now, in Berlin, the German government announced its biggest military package for Ukraine as the country bets on a successful counteroffensive against Russia. Our European correspondent, Maria Tadeo, is with us now. Maria, so we have a big diplomatic push from Zelensky, one we probably haven't seen in months. What is he getting out of this?
Yes, Danny, and it's not over because, as you say, he is in London today. That completes, or should complete, unless there's a surprise in the works from the Ukrainians. The story has been, as you say, in Italy, France, Germany, and the UK. All of these countries, frankly, they're important to Ukraine for a number of different reasons. But as you noted, on Saturday, there was a real highlight, which is that package that was announced by the German government, the biggest to date, 2.7 billion euros worth of new weapons, obviously tactically important for Ukraine, but also symbolically relevant too, because there had been questions about whether or not there was fatigue when it comes to the allies and this counteroffensive. I think when you look at the situation in the UK, will probably very similar today. There will be a conversation about the weapons. Remember, the UK has had a lot of bravado in terms of this idea that Russia will lose and Ukraine wins, but obviously the country says they need weapons and potentially fighter jets. Remember, this has been in the work for months now when it comes to the UK. The other issue that I presume will come up too is NATO. Remember, Danny, there is an important NATO meeting that will happen in July, the Vilnius summit in Lithuania, and Ukraine has manifestly said it wants to get a clear roadmap to NATO membership for the next, the future. Will they get the dates that they want this roadmap? That is still a question that is up for play.
Also, amid this flurry of diplomacy, we also had the G7, and G7 where the communique was probably different than prior world meetings because of China. So where does China stand in this whole thing, Maria?
Yes, and it was a straightaway condemnation from the G7, but as you say, this is an easy one. The problems we've seen come or happen at the G20 level, Russia will block any statement that mentions or features the word war, and China is clearly on the sidelines. Now, when it comes to the Chinese, this is interesting because we have seen this flurry of diplomacy. Remember, China had very successfully, to some extent, inserted itself in the mediation conversation. The world was waiting on this phone call between Xi Jinping and Zelensky. But a lot of that momentum, to some extent, has dissipated. A lot of this pegged to the scandal. Remember, the Chinese ambassador referring to the former Soviet nations that had questionable sovereignty. A lot of that dented the credibility of China and brought again this question of, is it really a neutral country? It is worth noting, however, the Chinese are sending a diplomat to Ukraine and Russia this week. But again, when you look at the language from the G7, the Germans, but also Zelensky himself, they repeat the basis of peace should be Zelensky's 10-point peace plan, not the Chinese. And by the way, the Ukrainian president made another interview on Italian TV on Saturday and repeated the way he looks at things. There is no point in talking to Vladimir Putin. The country is betting everything on a successful counteroffensive.
Okay, Maria, thank you very much. That's Maria Tadeo on the latest diplomatic push from Zelensky. Now, in other politics, a quick check on Turkey assets. It does look like we're heading towards a runoff with Erdogan, his main opposition. We are looking at Turkish stocks falling nearly 3%. They did hit the circuit breaker earlier, about an hour ago. They resumed trading. The CDS, the 5 years there, jumping to the highest since March 21. Of course, that's a pretty illiquid market. Dollar turning into gains in stocks with some exposure to Turkey, like BBVA, the Spanish bank, also seeing declines of 3.6%. All right, coming up on the program, from bodybuilder to the UK's youngest billionaire, we're going to talk with the Gymshark founder. That's next. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Turkish stocks resume trading after a circuit breaker as the nation's election looks to be headed for a second round of voting. The lira weakens along with European stocks that have exposure to the country. President Biden and House Speaker McCarthy plan to meet tomorrow as debt ceiling negotiations appear to gather momentum. Global equities move higher. Plus, Ukraine President Vladimir Zelensky meets UK Prime Minister Rishi Sunak after receiving promises of military support from Italy, Germany, and France over the weekend. Good morning. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Now, our next guest is one of the UK's youngest billionaire and a founder of a sportswear empire from very humble beginnings. I also want to bring in our very own Leanne Garrance to join me in this conversation. Leanne, fitting that we would be talking about athleisure, considering anyone can find us after these shows quickly changing into our gym clothes.
I feel like that's all we've lived in for years. And I feel like Danny Berger and I, we definitely enjoy the gym and we enjoy our gym clothes, don't we too?
It is very true. And someone who perhaps is benefiting from that is Ben Francis. He is the CEO and founder of Gymshark.
Yes, indeed. And he does join us this morning, Danny Berger. So that's why we've opened the conversation with our love for leisure wear. Ben Francis, thank you so much for joining us. Firstly, you opened a bricks and mortar store here in London in Regent Street 7 months ago. Ben, how's it all going?
It's going incredibly well, thank you. It was a big step for us because everything we've ever done for the last 10 years of our history was always been online. And we've always been keen to do something offline and move into a more omni-channel sort of approach. And we actually signed the lease for that store during the height of COVID. So it was a big, big leap for us. But I'm really pleased to say that it's been a great success.
So an absolute massive leap for you, and you said during COVID. Are you thinking the UK is a good place to invest, and are we going to see any more of these stores coming up on our high streets across the country?
Yes, I'm an absolutely massive fan of the UK and investing in the UK. I think we're super fortunate in many ways, and that's not to say that it hasn't been a really, really tough couple of years for lots of people with, you know, increased cost of living crisis and prices and inflation and things like that. But what we have to remember is the UK is a really small country with a really, high population. We can export out to the US and the EU really easily, and we're really optimistic about things moving forward.
So is that a yes to more brick and mortar stores, Ben?
Oh, and then in terms of more brick and mortar stores, I think because of the success of our London store, I think we'd be stupid to not look into it, and that's something that we're just starting to look into now.
All right, looking forward to that. I gotta wonder though, Ben, how strong is the consumer right now? Are folks still willing to pay £50 for a pair of leggings?
I mean, yeah, we're absolutely seeing that. And I think you'll be well aware there are lots of other companies that sell products significantly higher price point than us. We're still at a very, very accessible price point. We're really, really confident in our product. We think the quality really does speak for itself. And again, because of just the rapidly changing world at the moment, there are different weeks and different months where things spike and peak and trough and change. But at the moment, we're really confident, and we are seeing the numbers come through particularly strongly over the last few months.
Ben, I hear you saying that you're confident the numbers are coming through strongly, you've got a good price point going on, but we are seeing inflation eating into profits throughout industries. Where are you feeling the pressure? Where are you feeling the pinch right now?
Yeah, so we've definitely felt it, as all other companies similar to ourselves, with raw materials, labor costs, freight. Like I will say, the last few months, things have definitely got better. And we're starting to see those costs sort of ease slightly. So we're hoping that that continues. But like I said, the demand is there. Revenues are still growing. And we do think a lot of that is because of the fact that we've continued to invest in our brand through the Regent Street store, through different marketing efforts and things like that.
Are you going to, though, cut down on some of your costs? There are reports that you let some of your staff go in the U.S. Is that part of this mission, again, to keep costs low and at the same time make sure profitability is still in check?
Yeah, clearly we want to protect profitability, but we have taken a hit to our profitability, and that's because we really wanted to continue to invest into our brand. We want to build a 100-year brand, and we don't believe that you build a 100-year brand by only investing in that brand during the periods of economic growth and prosperity. We need to consistently invest over a prolonged period of time. And in terms of the restructuring of the business, I've learned through my, I guess, short 10-year career working at Gymshark from start up to where we are today, that businesses need different structures at different stages of growth. That, the requirements of businesses change depending on the macro environment as well. And we wanted to just restructure our business into a way that not only protects the structure of the business, but allows us to be really agile. When we look forward to what will win in the future, we think that continued agility is going to allow us to, really maximize the growth of our brand.
So continued agility, speaking about there, Ben. What about an IPO here in London? Any consideration of that happening?
To be honest, we're not thinking about IPO at the moment. Right now, it's all about really controlling costs, building out the best product, and focusing on the core of our business. And like I said, building the most robust, strong, but also agile business that we can. Maybe that's something that we'll consider further down the line.
But I got to say, your growth was astronomical, and it really was about capturing onto the online trend. I mean, you were one of the first, perhaps, to be marketing on TikTok versus any other of these gym brands. For you right now, what is your medium of choice? What's the most successful medium for you to be advertising on right now? Is it still TikTok? Has something else come up that interests you more?
No, listen, TikTok's really, really important to us. And like you say, we've gone from, TikTok not existing to us being one of the biggest brands on TikTok. Instagram, YouTube are still really important. Google and people browsing through the web in general. But honestly, our big bet is on being a truly omni-channel brand moving forward. We think that the biggest, most successful and genuinely most brilliant brands in the world have to be strong across all channels rather than just one or two. And you're right, we've had great success growing up on particular channels, particularly social. Now we want to be successful along them all.
What would it mean for you if the U.S. moved to ban TikTok? What would that mean for your business?
If the US was to ban TikTok, I think, listen, it would definitely affect us. But because of the fact that we are so invested in Google and Facebook, Instagram, and different companies like that, as well as the, omni-channel strategy that we're going to pursue moving forward, fingers crossed, then we think it should be, well protected and mitigated.
And just moving the conversation on slightly, Ben, when it comes to manufacturing and people are going green, we're looking at sustainability. Are you investing in that? Where is Gymshark going when it comes to that look ahead in the future?
Yes, absolutely. So, I mean, I'm heavily involved in this. I've literally spent the last few months traveling around different factories around the world. And we only really use US cotton. We use recycled polyesters and things like that. So we're becoming more sustainable than we've ever been. Every single season we get better and better. And to be honest, I think we probably just don't talk about it enough, about how much progress that we have made from a sustainability point of view. But again, that will be coming in the next 12 months, where we're really going to be talking about some of the great wins we've had from an eco perspective and the build of our product.
So I just want to sort of wrap up things with asking you, you are one of the youngest billionaires here in the UK. For anybody watching, looking to invest, looking to start a company, looking to start what you've done, what is your best advice to some of those people watching today? I think my biggest piece of advice would be just to try something. And you're right, like people talk a lot about Gymshark because Gymshark was the success, but they forget about the 5, 6, 7 businesses that I started before Gymshark that failed. And for me, it's really important just to try again, because the likelihood of an entrepreneur's first idea or first business being a success is relatively low. And the learnings that you get from failure are absolutely great. So my advice would be follow your dream, do something you're really passionate about, but ultimately just keep pushing forward and trying new ideas.
Oh, Ben, what a lovely call to action to end it on, an inspiration for all the young folk listening. Ben Francis there, Gymshark CEO, and our very own Leanne Gerrans. Thank you both so much for joining. All right, coming up, the gold sector gets its biggest deal ever as Newmont buys Newcrest for $19 billion. Why now, and is this as big as it gets? We're going to discuss that next. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Newmont has secured a deal to buy Australian rival Newcrest in a deal that's worth over $19 billion. It's the gold sector's largest ever transaction and consolidates the U.S. miner's status as the world's biggest bullion producer. Harry Brumpton, our M&A reporter, joins in Sydney. So, Harry, we saw shares close Friday down about 3% off of the implied deal price. So did investors feel this was expected? Are they skeptical? What accounts for that difference?
Yeah, just a little bit of a difference there, Danny. There's,
we'd had interviews with Sherry Dew, the CEO of Newcrest here in Australia, just a few weeks ago, where she did tell us that the board was ready to recommend an offer, which was an interesting story at the time. So the gap was pretty tight anyway, but there was a bit of a surprise last week when the company extended due diligence for Newmont, and that threw up a few question marks about whether there was anything kind of going on or anything wrong with the process that they'd seen so far. Ultimately, it just turned out that there was, it's just such a big deal that there was a lot of paperwork, a lot of volume to get through, people running documents in parallel and tails to some of the terms. So, it got there eventually and a happy result for the shareholders that stuck with it. They're also going to get a franked dividend as well, which is like a tax-free dividend, a special kind of dividend at the end of this as well, if for those that stuck with it through the process.
Well, what is the rationale here for Newmont to do this deal and just become so enormous?
Yeah, I mean, it definitely puts them just purely back of the envelope scenario, well and truly the largest. I mean, the next largest is Barrick. It's going to be 60% larger than Barrick, probably, according to my rough calculations, on a purely market cap basis by combining number 1 and number 6 gold miners globally. But, there's more to it than just scale. I mean, the problem is that a lot of miners are facing declining reserves because there's just not that much getting found these days, and also people are much more wary around exotic jurisdictions that they formerly would have been ploughing into around Africa, and there's more sovereign risk in some of the countries where miners have historically been not afraid to tread. It's a pretty uneasy political environment globally these days, so that factors into it. And on top of that, Newcrest is very good at some relatively novel and new techniques. Their mines, Cadia and Lihir, are very high production, high margin versus the industry average anyway, in terms of have more than 500,000 ounces of output and really high production volumes and margins off that. And it's because of things like they've invented things like, or not invented, but pioneered techniques such as block caving and mineral extraction and chemical extraction processes as well. So that should add and could really supercharge some of the existing Newmont assets as well globally.
Are there going to be more major deal making in gold, or is this kind of as big as it gets? I mean, I'm assuming it can't get much bigger.
It would be hard to imagine. I mean, Barrick, though, however, their CEO is a consummate deal maker, and they kind of started this whole wave of mergers and acquisitions that has been going back almost as long as I've been reporting on deals. I can remember at least in 2018, it was a bit of a surprise that the sleepy old gold sector was starting to see some M&A again, and Barrick pioneered that with their $6 billion deal for Randgold Resources. So, never say never, and especially, as I say, with these drivers behind it where, reserves and all reserves for production going forward in high quality jurisdictions with superb assets. People are going to be looking to those top tier players already rather than kind of junior explorers. So that puts more pressure on the top end of the barbell for bigger mergers going forward. But it will be hard to beat this for sure.
Okay, Harry, thank you very much. That's Harry Brumpton, our M&A reporter in Sydney. Now, Siemens Energy shares are higher this morning after the company upgraded its revenue expectation for the year with strong orders for energy transition technologies. Now, that comes despite the Spanish wind turbine business continuing to be problematic, with the company forecasting a deeper loss for that division. CEO Christian Bruch told Bloomberg that this will be a transitional year for the company. And we also asked him about the impact of the Inflation Reduction Act.
There's a continuous strong demand also still for gas technologies. However, this is based on the capability to afterwards decarbonize these technologies and to convert them to hydrogen, where I think we are well positioned. And in that regard, the pleasure of the first half year, and particularly of the last quarter, was that it really was very balanced in terms of the order intake. You also have seen that we secured a large offshore wind project in the UK, which is also a good sign. It's the second largest offshore wind project which exists, and this is obviously a good trajectory also in wind, despite obviously the fact that we work through the problems.
to that point, we can't talk about wind turbines without talking about Gamesa. Obviously, some of the profitability issues there are still clear. What continues to be the biggest source of cost inflation, the biggest source of headaches when it comes to the supply chain for you?
You know, we knew that we're going to work, particularly on 23, through some of the remaining issues, and this is why we always said it's going to be a little bit volatile or bumpy ride throughout 23. 23 going to be a transitional year. It is nothing new in terms of what we're working through. Is really making sure that onshore recovers, that the startup of the new onshore platform gets more and more stable. They now go into operation. There's here and there obviously things to fix. Offshore is now ahead of a quite substantial ramp up. So we're hiring people, we are increasing factories, we need to get more output of the factories. So this is, working through the matters. It's not substantially new, it's just working through it, and we're on it, and we always said it's not going to be done in a quarter. So you will need some patience with that and with us on that. And we're also ahead, don't forget, a massive offshore auction period now, which is still coming in 2023 with big offshore orders. This will be on the order intake side also an interesting development.
Okay, the question is the patience of the market on the Gamesa side of the business for you. You used the word enormous grid building. Who is spending the most? Put some context around the word enormous grid growth. Is that in China? Is that in the Americas? Is that in Europe? Where is it and how much?
Yeah, we see it obviously now really starting across the board. Obviously, Europe had started relatively early with, let's say, long-term plans, and this is now coming to realization and implementation. So we see the biggest chunk of the order intake in Europe, a big chunk of that also in Germany. But we also now see other parts of the world coming up. We secured the first orders also on the HVDC connections in the US. We see the Middle East, interestingly enough, having more and more discussions in terms of how to interconnect countries, how to interconnect regions. And I would say a little bit coming later then is Asia, but discussions are happening at the moment everywhere globally. Europe will be the stronghold for 23 in this area for us, and we are well positioned there. But as I said, we continue to see changes elsewhere. And obviously, the IRA helps also to drive the element on the grid build out also in the US.
Siemens Energy CEO Christian Bruch speaking earlier to us. Now, coming up, traders brace for volatility after elections in Turkey and Thailand. We're going to look at what the results mean for currency markets. This is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think they're much better than when I was growing up. There's so many people who occupied areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. The knock-on effects of elections in Turkey and Thailand are already being seen in currency markets. There's set to be more uncertainty. Turkey is heading towards a runoff election, while Thai opposition parties have to try to form a government. Let's bring in Ben Ram on this, Bloomberg Markets Live cross-asset strategist. Ben, let's start with Turkey, because there's certainly a lot of volatility priced into this market. If we are heading to a runoff, what happens in the meantime? How do investors approach this market?
Well, it's a constrained market, Danny, for investors to be approaching the market, approaching the leader positioning just yet, because, as you know, there is heavy intervention in the currency from the Turkish central bank authorities, to the extent that we are talking about some 175 billion upwards in the past couple of years. In April alone, Bloomberg Economics suspects the interventions amounted to 30 billion. So that's humongous part of the market is taken up by the central bank. So there is heavy price distortion. How this price distortion plays out will depend on the second round vote runoff. If the opposition comes to power, then you would see the leader, unwind all the gains that it has seen because of the prop-up intervention. So the currency needs to come off the ventilator here, and the question is, when is it going to come off the ventilator?
Now, when it comes to Thailand, it's perhaps a little bit different, but the same sort of impulse. If we get this immediate market reaction, we see the baht advance, opposition parties on course to get that power back. How long-lasting is that strength? Because, of course, there's still some uncertainty in this market, too, in terms of how the final government looks.
Absolutely, Danny. I think that, it'll take, any time between a few weeks to a couple of months for the government to be in place. And what kind of a government will be ultimately formed is still up in the air. We don't know the contours of the new government yet. That uncertainty means that there may be short-term profit-taking in the baht, but the baht, unlike the lira, is a fundamentally better placed currency simply because Thailand is the next external creditor and its economy is growing much better than the economists had forecast at the start of the year. So those two factors and the fact that we are going to have a democratic government possibly in Thailand after a decade-long rule of military government means that the fundamentals are in place for the baht to consolidate its gains and build on those gains perhaps later in the year.
Ben, thank you so much for joining us. What an interesting day when it comes to EMFX. Ben Ram there, Bloomberg Markets Live cross-asset strategist. All right, let's get you set up for the rest of the week and what we're watching. On Monday, we're going to get Eurozone industrial production figures. That'll be 10 a.m. UK time. Later in the day, BOE's Hugh Pill will be speaking about the cost of living crisis. Tuesday, UK jobs data and U.S. retail sales a few hours later. Wednesday, it's the latest Eurozone inflation figures. Also, BOE Governor Andrew Bailey speaks at a British Chamber of Commerce event. Thursday, Mexico's central bank decision. Friday, G-Summit kicks off in Hiroshima. So a lot to look forward to. Some inflation figures there after that Euro commission this morning, upgrading the view of inflation. Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards in London and Kriti Gupta in New York.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lyons.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Farrell. Weekdays on Bloomberg.
In this world where we know the risk of recession is high, but we're not seeing the whites of the eyes of it in hard data, and that's why we continue to have this sideways chop.
Deteriorating macroeconomic data, high inflation, persistent inflation, especially wage inflation, and recession. I worry that where the market could be most wrong about is actually pricing in cuts too early.
There's obviously a lot of event risk, but I would say we're reasonably well set up in terms of the disinflation process that's underway.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. A boost for the Eurozone economy. A new European Commission forecast says it will grow this year at a faster pace than previously expected. But persistent challenges remain. We will speak to the Eurogroup president, Pascal Donohoe. Markets react to elections in Turkey and Thailand. In South Africa, the rand rebounds amid signs that a dispute with the United States is easing. And coming down to the wire, President Biden and House Speaker Kevin McCarthy resume talks this week on raising the debt limit. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. And Kriti, we keep the debt limit conversations front and center this week. But of course, we have time to think about some emerging market themes today, from the geopolitical ones to the strictly political. A lot to take in when it comes to EM themes this week.
It certainly is, especially as you say, we wait for that stalemate essentially in Washington to kind of thaw a little bit. And Anna, it's interesting as we talk about risk-taking, EM is the perfect place to talk about it, because even there are degrees of risk-taking, if you will. It's not just about the geopolitics. You're also seeing some of the central banking fold into it as well, in addition to elections for some of the most volatile currencies around the world. Let's start with how that translates to futures, though, because as you see that movement, there seems to be a little bit more kind of appetite for risk here in the States, at least in pre-market trading. Futures higher by 0.3%. A two-year yield, though, that is still hovering around that technical level of 4%. We're at 398 there, unchanged, but the direction of travel is certainly down, and with it taking weakening the dollar. As we talk about that, those EM FX pressures, it's going to show up in the dollar. Simply the idea here that if the dollar weakens as a whole, EM as a whole strengthens just a little bit, even in light of the volatility and the kind of presidential elections that are taking place around the world. Something we're going to keep you up to date on in just a few moments. NYMEX crude also trading at a 70 handle, which, Anna, actually folds into the EM conversation quite nicely as we talk about just how much the inflationary pressures are affecting the geopolitics of these various regions.
Yeah, absolutely. Inflation in focus in developed markets and certainly in many emerging markets, and playing into some of the politics that we're seeing, although there are very much other EM themes available right now. Let's have a look at where we are on European stocks. We've got the UK market up by 0.2%, the FTSE 100 up by 0.2%, the CAC 40 up by 0.4%. Some of the luxury names over in Paris benefiting from a slightly more risk-on picture this morning. The DAX up 0.1%. But let's think about that large area of red down there in the corner. That is, of course, the Turkish market coming under significant pressure. We'll get analysis on the ground shortly out of Turkey, but let me just underline the weakness that we're seeing in Turkish stocks today, down by 2.7%. And this is to do with uncertainty, and markets not liking uncertainty. We could have had a verdict today. Looks as if we go for it to a runoff in these presidential elections, which means more uncertainty persists, and so stocks retreat in the meantime. That is extending beyond just Turkey domestically into other parts of the world, other businesses where there is exposure to Turkey. And BBVA, the Spanish bank, is an example of that. That stock down by 4.2%. Currys is a retailer in the UK, seen as a bit of a bellwether. They upgraded their guidance, actually. The CEO talking quite positively about what he sees in the UK for the UK consumer, which increasingly surprises, I suppose, on the upside. And Siemens Energy, this is the energy business, spun out of Siemens, of course, some time ago. Despite headwinds, if you excuse the use of that phrase, that they are experiencing with their Spanish wind business, that is Siemens Gamesa, they have managed to upgrade their overall guidance as well because of what the other part of their business does, which is, of course, energy transition, Chrissy, and there's a lot of opportunity, they say, on that front.
And of course, it's going to be a theme, again, that we see ripple across the world, Anna. It's going to be a really crucial question. I want to get to one of those major EM stories, though, that you were talking about, starting in South Africa specifically. This is going to be really important as we talk about the rand actually moving. But before we hit that, we're going to talk about Thailand. This is going to be a really big story when it comes to simply the geopolitics surrounding the elections that you are seeing around the world. And for that, we are going to go to our Asia Markets editor, Margot Towie in Bangkok. Margot, let's start there. Talk about the reaction and how significant it is in Thailand. Walk us through what we know.
Yeah, hi, Krita. Well, the election has been very interesting in the context that the progressive parties really took the vote, and surprisingly so. They were expected to lead, but not by quite such a margin. So they're now in a position to get together, form a coalition and hopefully government. They do face the hurdle of requiring the Senate, which was appointed by the military junta, to vote for them too. So that's the hurdle that remains. That will take a little while because we have, at the moment, a coalition that could be as many as 5 parties that have to come together, that has to agree on what they're going to do before it even gets to the point of putting forward a prime ministerial candidate that the Senate would vote on. That's where we are at the moment.
So those are the next steps, I suppose, Margot. What happens from here? Yeah. Remind us what were the main themes that were being voted on in this democratic exercise.
Exactly. This is the important thing. Now, the party that led, surprisingly, is called Move Forward, and that's the most progressive party, and its platforms were very much change. It was very much based on change, more choice, more the ability to speak about things that are presently not allowed. You go to jail for talking about certain things regarding the monarchy, liberalisation of same-sex marriage, liberalisation of certain sectors of the economy that are pretty much controlled by oligarchs. And they really swept it. They swept Bangkok. They swept Greater Bangkok. It's surprising. The party that they're most likely to form the coalition with is affiliated with Thaksin Shinawatra, who was ousted in a coup. His sister replaced him. She was ousted in a coup. His daughter, his youngest daughter, is a prime ministerial candidate in that party as well. So they are likely to forge together. Their platform was very much offering incentives to pull people out of debt traps, pay off the bills, get a better life. that sort of thing. Electric prices are high because of commodity prices and so forth. So these two groups that have similarities but are disparate will come together, most likely to form a coalition with some others.
Certainly something we're going to be keeping an eye on. Bloomberg's Margot Towey in Bangkok, keeping us up to date of another historic presidential election. We thank you as always. Let's now go to Turkey. I would say the highlight of the weekend. Bloomberg's Yusuf Gamal Eldin is standing by in Istanbul. Yusuf, you've been speaking to experts all morning for a record, a historical result. What has there been the reaction on the ground?
Well, I'll caveat this much because I am battling street cats and street musicians for space alongside this beautiful bridge. So in case anything happens over the next minute and a half or so. But in terms of the actual experts on the subject at hand of a first round election that caught many by surprise in terms of the preliminary results, what we had is Recep Tayyip Erdogan, the longtime president of Turkey, about almost going 20 years, he was able to show a level of resilience that the pollsters just got wrong. And what this means is that leaves us with a second round where the initial third contender is going to skip out. And the bigger question is, how do those votes get reallocated? The initial thinking, based on some of the people with close knowledge of the matter, is that a lot of those votes are going to go to Erdogan. So he's actually in a stronger position for May 28th than he was in the first round. But there might not be that much time left given the kinds of alarm signs we're getting from the economy and the markets.
Okay, yeah, and on that subject then, Yusuf, so where the votes that went to the third candidate go from here will be crucial. How have the markets reacted? We saw, I visited the sort of stock market reaction earlier, which has been negative.
Exactly, so out of the gates, we hit a circuit breaker. We're down a little bit over 6%. And now, investors clawing back some of those initial losses. The banks, though, sold off hard. You look at some of the lira funding costs on an overnight basis, those rose. The credit default swaps on a 5-year basis, such an important benchmark for understanding how investors are feeling. Those rose to levels that we haven't seen since the end of March. Bonds sold off as well. The clock is ticking. Even in the case of an incumbent president who retains his power for another term, what is he going to do? Because the economy, and at the rate the current unorthodox monetary policy is burning through the reserves. I mean, there was such a big talking point throughout the morning. They're going to have to move, whether it's this administration or another one come May 28.
Certainly something we're going to be keeping an eye on. Bloomberg's Yusuf Gamal Eldin sitting in Istanbul there, covering all things Turkey election. Meanwhile, in South Africa, the rand is rallying. And South Africa's finance minister says his country resolved a row with the U.S. over allegations that Pretoria supplied weapons to Russia, and it's unlikely to face any repercussions. For more on the rand and the direction of the general currency volatility we're seeing, let's bring in Ben Rahm, Bloomberg Markets Live, across asset strategist. Ben, it's interesting on today that we're talking about both the lira and the rand, because of course that has been a popular currency pair in the past in the EM world. How do you trade all the volatility in the EM space right now?
Morning, Kriti. I think one of the more interesting trades in the EM volatility space in fact involves both the rand and the lira. So you want to go long the rand against the lira in the short term. Why do we say that? Because if you look at the rand, it's been sold last week, or we saw that intent selling last week. And at current levels, the rand is flirting near a record, holding near a record. And if you look at the real effective exchange rate of South Africa, the exchange rate is undervalued on an REER basis. And that is not sustainable over the long term. Given that there are so many attractive points for the rand, it's cheap. And if you believe in the commodity story, and if you believe in a turnaround of gold this year, I think the rand faces good prospects. On the other hand, if you look at the lira, it's being propped up artificially, and there have been interventions to the tune of more than $175 billion. So that's a good trade.
Okay, yeah, watching the South African government and its relationship with Moscow and Russia, certainly really interesting, and then the relationship with the US as a result. Back to the US, we're also following the debt talks, of course, in the United States. And Ben, I was talking to others on the Markets Live team earlier on who seemed quite optimistic, really, about the fact that we've got a meeting, it's going to take place tomorrow, that could alleviate pressure. Others point to the fact that we're not near the deadline yet, and these things typically do get closer to the X date, and perhaps we'll see some market negativity intensify as a result of that. What's your take?
Absolutely. I think that the markets, many parts of the markets are still not priced for the debt ceiling to intensify. People are thinking that, look, common sense will prevail, and then the lawmakers will come together and propose a resolution. Now, as we get closer to the X date, and the crucial point is that no one knows the X date for certain now, because it's supposed to be June 1, but we are supposed to get an update from Treasury Secretary Yellen at some point. But I doubt it's going to be June 1. It is probably around the June 6th or June 10th even, because no one can predict with certainty the cash flows that the Treasury will get in the near future because of tax receipts and things like that, which are difficult to kind of look into the crystal ball and come up with an exact number. But if you assume that the angst in the market is centered around June, the first 10 days of June, if you look at Treasury bills maturing in 1 month, the yields have shot up tremendously, more than 200 basis points in less than a month, and that shows the angst, and that will rub off into other complex, other parts of the markets if we don't see lawmakers coming together and finding a resolution.
Ven, thank you very much. Yeah, that angst only visible, particularly in certain asset classes then. We will see how that develops. Ben Ram of Bloomberg Markets Live, thank you very much for joining us. Coming up on the programme, we will go live to Brussels for an exclusive interview with the Eurogroup President, Pascal Donohoe. That conversation coming up shortly as the European Commission upgrades its guidance around the Eurozone. Not such a straightforward conversation, though. And Sandra Horsfield joins us, Investec economist. We will delve into her assessments of the Eurozone. Also, the debt ceiling debate looms large, and on that subject, we will go to Terry Haynes, Pangea policy founder. He'll give us his thoughts. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Bloomberg has the Fed coverage you're looking for. Today, Bloomberg's Mike McKee sits down with Atlanta Fed President Raphael Bostic.
There are just a lot of things to reflect on in terms of where the economy is
Then on Tuesday, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook.
And an interview with Chicago Fed President Austin Goolsbee.
We should gather further data.
It all starts today, right here on Bloomberg, your global business authority.
The progressive firming of core inflation has set EU monetary authorities on a path of forceful tightening. Compared with our previous forecast, market expectations point to higher rates, though markets still expect the ECB to be nearing the end of its tightening cycle.
That was the EU Commissioner for Economy, Paolo Gentiloni, speaking as the Commission significantly raised its Eurozone inflation outlook for this year and next, warning of persistent challenges for the region's economy, also upgrading the GDP forecast. For more, we're joined by our correspondent Maria Tadeo, who is joined by the head of the Eurogroup, Pascal Donoghue, in Brussels. Maria.
Yes, and he joins us ahead of the Eurogroup meeting. And Mr. Donoghue, you told me, by the way, you were at the G7. You got back from Japan yesterday, woke up at 4 a.m. in the morning. How are you even here?
Well, it is a Eurogroup meeting, so I am here and looking forward to a very, very good and very full and productive day. And of course, I'll be briefing my colleagues on the discussions that happened in the G7 in Japan.
And on the G7, first of all, just to get it out of the way, I'm sure there's a lot of people that want to get this off the way too. When it comes to the debt ceiling, how much of an issue was that at the G7? And does it really worry you, or do you look at it and you say, ultimately, this always gets resolved?
Well, Secretary Yellen, when she was in Japan, did emphasize how important this is for the American economy, and did talk about the effects that could develop for the American and the global economy if agreement is not reached. But ultimately, we all have confidence in the ability of Secretary Yellen and President Biden to resolve this matter. And it was very evident to me when we're there that they're treating the matter with the utmost urgency, and hopefully in the coming days the matter will be resolved.
Well, let's keep an eye on that. And when it comes to the European economy, however, we had new forecasts that just came out. Let me get your take on this, because the way I look at this report is you could be positive and say, well, the job market is clearly still strong. The economy also, we saw GDP up for both years, this year and next. But you look at inflation, it is sticky and it's going to be longer and higher inflation than expected for longer. What's more problematic for you? What do you look at?
Well, what is very positive is the fact that we're still seeing our economy grow for this year and next year, and particularly from a political and social perspective, we're seeing very high levels of employment. But the figures that were released today also underpin the challenge that inflation poses. And while we are expecting to see inflation decline, it's clear, particularly from a budgetary point of view, that we have to coordinate our efforts with monetary policy to facilitate inflation coming down, and the figures today demonstrate the importance of that.
And before we get into the fiscal policy, which I know you have a debate, or there will be a long debate from now until the end of the year when it comes to the rules. When you listen, however, to the words of Paolo Gentiloni, your colleague, he did say it does seem the European Central Bank has entered the final stage of this monetary tightening that we're seeing. Would you share that opinion? Do you feel we're entering really that final round? And do you still have confidence that the European Central Bank will get this right without breaking anything in the economy? You value growth. Can they hike rates, bring down inflation, and not crash the economy?
I'm confident that they and we can get the balance right. There are clearly some signs that the inflationary dynamic is beginning to change. From an overall level, it's moderating downwards from where we were a year ago. But inside that inflation, we're still seeing core inflation at too high a level. And I do believe that across 2023 and 2024, the ECB and governments can take the steps that are needed to get inflation back down to a level that it will not be the challenge that it is today for living standards and for the ability of households and businesses to trade and live.
And not to get you to comment on the actions of the European Central Bank, because I know there's a very strong separation usually between the two, but to be able to do this job, you have to at least have an opinion as to whether you feel the end of the hiking cycle is coming. Do you have any thoughts on that? We've seen a downshift to 25 basis points now. Again, it goes back to the confidence. Are we entering the final stage?
I'd prefer not to comment really on what the ECB may or may not do in the future. And that is driven not just by a respect that I have for their mandate, but it's also driven by an acknowledgement that we are in a complex environment in which, unknown developments could still influence where we might be in the future. But all that being said, what it's important for me from a finance minister perspective is even though we still have a challenge with core inflation, the overall level of inflation within our economies is down versus where we were a year ago, and that is an important development. I hope that trend continues, which in turn would allow us to take the steps that are needed to still preserve employment and a degree of growth in our economies.
And let's talk about the financial sector because, well, first of all, I want to get your thoughts as to, do you feel the banking turbulence, is that over now for Europe? And then I guess in a perverse way, you could argue it could give you some impetus to finally get progress on the banking union, the capital markets union. Today, you're going to be talking about this. Are you confident that this is now going to accelerate?
I'm confident we can still make progress on banking union and capital markets union. I'm confident, for example, with regard to banking union, that the process for completing banking union is going to take time. But the way we complete banking union is by taking steady steps to deepen it. The Commission brought forward new proposals there a number of weeks ago in relation to different aspects of banking union, and I believe we will make progress on those proposals inside the current Commission mandate, which is up to the middle of next year. With regard to capital markets union, we're going to review where we stand on that project today, and what I want to agree with my fellow ministers is a plan where we could identify priority areas for further progress on CMU, and we'd also aim to have that work complete by next summer.
And just very briefly, at the G7, you had a statement in which, you condemned Russia's war in Ukraine, no issues with that statement, and also repeated, we're in this for the long haul. However, do you detect or did you detect any signs of financial fatigue when it comes to helping Ukraine? A lot of money has been, for obvious reasons, pumped into this country to help it fight Russia, but did you detect or pick up on any signs of that?
I genuinely saw no evidence of financial fatigue. The G7 statement was unambiguous in making clear our commitment to support the economy of Ukraine. And in the last number of weeks, we've seen progress now on agreeing an IMF program for the Ukrainian economy. And even over the last number of days, we've seen further commitments from a defence perspective to support the people of Ukraine in the war. So as the G7 statement made clear, and as the finance ministers of the European Union have emphasised, we will continue to provide the economic support that's needed to the people of Ukraine while they're involved in waging in this war, and ultimately, I hope, taking the steps that are necessary to repel the Russian invasion.
Well, Mr. Donoghue, thank you so much for joining us. Good luck today, and hopefully some sleep in the carts for you. Critty, that was Pascal Donoghue, the head of the Eurogroup. And again, we talked about this G7 statement, support for Ukraine, and he referred to that mega package that was approved by Germany on Saturday, 2.7 billion euros to help this Ukrainian counteroffensive. As you know, Zelensky is in Europe today and has been over the weekend.
Yeah, some great reporting there from Brussels. Maria, today we thank you, as always. It was a crucial interview with the Eurogroup's president. Now, keeping you up to date with news from around the world, here's the first word. As Maria was just pointing out, Ukraine's President Vladimir Zelensky meets with UK Prime Minister Rishi Sunak today. The British government says it will be providing Ukraine with hundreds of air defense missiles and hundreds of new long-range attack drones. Over the weekend, Zelensky met separately with the leaders of Germany and France. According to U.S. Homeland Security Secretary Alejandro Mayorkas, the number of migrants trying to cross the southern U.S. border fell 50% Friday and Saturday. That bucks expectations of a surge after pandemic-era border rules expired. The unprecedented jump in border crossings during recent months has been a political albatross for President Biden. A big transaction in the oil pipeline business. ONEOK has agreed to buy Magellan Midstream Partners in an $18.8 billion cash and stock deal. It would create one of the largest oil and natural gas pipeline operators in the United States. The price represents a 22% premium to Magellan's closing price on Friday. Gold giant Newmont has agreed to pay $19.2 billion to buy Australian rival Newcrest Mining. That consolidates its position as the world's largest bullion producer. The deal also will boost Newmont's resources of copper, a metal where demand is expected to outpace supply. And a lot of consolidation in the commodity sector, but I got to say, I think the Newmont deal really takes the cake because it's coming at a time when gold is at record high prices.
Yeah, and it's interesting to think about what the link might be there. Does that signal we're at sort of peak levels in terms of M&A, or does it signal that there's more to come? Confidence in the valuations we see at this point, a conversation that no doubt will continue. Gold benefiting, of course, from nervousness around the US debt ceiling. We continue to watch those M&A themes, limited as they seem to be to certain sectors, including basic resources. Coming up on the program, we'll talk about the global economy. Sandra Horsfield joins us, Investec economist. We'll talk about the Eurozone growth story and, of course, the US debt ceiling. This is Bloomberg.
Of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are, launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m.
in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A boost for the Eurozone economy. A new European Commission forecast says it will grow this year at a faster pace than previously expected, but persistent challenges remain. Markets react to elections in Turkey and Thailand. Meanwhile, South Africa, the rand rebounds amid signs that a dispute with the United States is easing. And coming down to the wire, President Biden and House Speaker Kevin McCarthy resumed talks this week on raising the debt limit. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, a lot to digest this morning. Of course, we are all on the debt limit watch, essentially those talks continuing in Washington, but it feels like today's market story is all about EM, all about FX.
Yeah, absolutely. We've seen a lot of EMFX stories being read on the Bloomberg terminal, being focused on by global investors, and a lot of news flow surrounding, as you say, Thailand, South Africa, Turkey. A lot to talk about. Come to Turkey in a moment. This is the Stocks Europe 600 right now, up by 0.4%. Critty, to your point about the debt ceiling debate, some suggesting that perhaps we're seeing a little more positivity at the margins around that. We have a meeting. It takes place tomorrow, and maybe we'll see some progress. Others say we're not close enough to the X date to see any progress on those debt talks. That's not going to come just yet, and we might see some fallout in markets as we head towards the X date, of course. This is the Turkish equity market picture, down by 2.8%. Is this just about uncertainty? I referenced that last time we checked in on these boards, but is it just about uncertainty? We go into a runoff election situation, or is it a verdict on the potential for another term for President Erdogan? We certainly got a comment from Moody's coming through this morning, the ratings agency, suggesting that if we do see Erdogan win another term, that means a continuation of unorthodox monetary policy. BBVA is a Spanish bank, but it is feeling the effects of the Turkish election. So we are seeing some banking stocks under pressure in Turkey. And this is a bank that has exposure to that trend. So BBVA down by 4.6% this morning. There's another Spanish theme going on at the German business that is Siemens Energy, because there's weakness in their Spanish wind business, that's Siemens Gamesa. But that is being offset by broader positivity around the energy transition. As a result, the business is upgrading its guidance, and the stock is up by 3.8%, Chrissy.
Yeah, and speaking of things that are going up, S&P 500 futures are as well. We are starting to see that sentiment in Europe, Anna, flow into the United States. A little bit momentum since the last time we checked futures here, higher by about 0.4%. But to your point, it really is all about that stalemate. Remember, we ended with losses last week, so it is natural to see a little bit of a bid coming into the market. But of course, M&A and some of that risk appetite for EM is going to factor into the sentiment you are seeing, at least in the stock market. I would say the same thing in the bond market as well, although you are seeing yields a little bit higher. Two-year yield, they're really hitting right up against 4%, 3.9999. That is 4 nines behind the decimal point. And with it, you are seeing some movement in the dollar. I think the dollar story is really interesting because on the surface, Anna, Bloomberg Dollar Index looks unchanged, but underneath the surface, weakness in the yen compounded with strength in some of the commodity currencies, really following the story you're seeing in the likes of oil, copper, and gold, which brings me to those record levels or near record levels. You're seeing spot gold at 2015 on the precious metal, higher by 0.3%. You mentioned this earlier as we talk about that debt ceiling debate, that bid for safety very much showing up in gold. But I have to add, you're also getting some deal news in the gold space today. Consolidation between Newmont and Newcrest Mining in the long term. What does that do to gold prices? Does that have an effect on the supply story? That's certainly something we're going to be watching, Anna, as again we talk about the trade that's going to be evolving this week as the debt ceiling limits progress.
Yeah, absolutely. That debt ceiling certainly a focus for investors. And interesting that, Chrissy, we saw the Markets Live survey of financial participants on the Bloomberg terminal certainly suggested that there are many in finance who think that the risks of default are higher this time than they were in 2011. We'll get to that theme in just a moment. Sandra Horsfield joins us, Investec economist, and I wanted to start. Good morning to you, Sandra. Thanks for joining us. I wanted to start by getting your thoughts on the European growth story. We got these new forecasts from the European Commission, an increase in GDP estimates, but at the same time they were saying that there's downside risks and those have increased. What's the direction of travel for Europe, do you think?
I think in general, the situation is clearly much better than it was, given the energy backdrop, given how much of an improvement there has been. As a net importing area of energy, the euro area has benefited, and we're seeing that carry through. At the same time, if we see the very latest trends in terms of confidence, isn't that all that great? The very latest manufacturing orders, etc., indicate there's still some real weakness and some real softness in production. We are perhaps less optimistic going forward because we're still having the lagged impact of interest rate hikes that's yet to come through. So perhaps not quite as much momentum as there might have been otherwise.
Yes, and if you expect the ECB to keep hiking, even as the Fed maybe has paused, that seems to be what a lot of people are suggesting. What does that mean for European assets, for European stocks that started the year so strongly, and for the euro?
Of course, we had a big disconnect early on where the Fed was much more aggressive in its tightening, and that had big differential repercussions. At this point, markets are clearly at the point of thinking, well, the Fed is pretty much done here. We're heading lower with rates, but Europe is not there yet. So from the currency perspective, probably that means a somewhat softer dollar, the counterpart being the euro, one of them. And that's also something that is likely to also weigh on the activity in the Eurozone in itself.
Sandra, good morning from New York. Let's talk about the stickiness of those prices. Are you at all concerned about that trend, that deceleration, that almost easing of hawkishness that you're seeing on both sides of the Atlantic, turning around as we talk about perhaps sticky prices, as we talk about kind of these corporate price hikes that are then at the end of the day not necessarily going to change even after the Fed and the ECB alike perhaps end their respective tightening cycles? Your thoughts?
I think it's difficult to say at the moment exactly how much of a softening we're going to get. We have seen this fall in energy prices we're talking about. We haven't quite seen that yet translate into lower goods price inflation. That is probably coming. But how much of an impact and how much of it is embedded in service prices too, it's a big unknown. We're still across, on both sides of the Atlantic, dealing with very tight labor markets. They haven't really loosened. And in that sense, I think the hawkish rhetoric really underlies that sort of picture. Yes, the economy may be decelerating more clearly in the US, but the labor market hasn't turned. In Europe, we still have a strong labor market and perhaps less weakness than had been expected earlier on in terms of economic activity.
Sandra, I'm very glad you hit the labor market story because, look, I'm sitting here in New York. Anna's with you in London right now. And as we talk about labor markets, there are two very different approaches that European governments take respective to the American government. How is that factoring into your thesis in terms of kind of putting together the labor market with how the ECB is going to perhaps deal with inflation in perhaps a different way than the Federal Reserve? Walk us through your thinking.
Well, certainly, if we look at the inflation drivers, in the case of the US, it's arguably the case that demand has generally been much stronger in an underlying sense. Europe has been held back in that respect. But the labor market tightness is a common theme. If we are at unemployment rates as low as they are, but we're seeing some signs of cooling in terms of labor demand, that could help bring down inflationary pressures. In Europe, perhaps in an underlying sense, inflation pressures aren't as strong as in Europe. So perhaps it's not so much more tightening that's necessary, even by the ECB. We have one more hike expected, could be slightly more. But I think in general, we're getting closer to the end of the tightening cycle.
Sandra, thinking about the debt ceiling, you bring an economist perspective to this, though. So I wonder what is in focus for you. I mean, some people suggest that as this conversation in Washington continues, that can weigh on consumers, and maybe there's some negativity then affected on consumers because of the talk about the debt ceiling and what that would mean. Is that your main area of focus when it comes to watching that Washington rhetoric?
I think a lot of it is to do with what it means in terms of market interest rates. And consumers may be reacting to the overall sentiment, but perhaps they are most of all focused on what this means for their own personal finances and their own personal borrowing costs. Of course, the event of a default in the US and what that would mean in terms of borrowing costs, there are lots of projections out there saying this could be really detrimental. So perhaps sentiment is affected by that to some extent. I think the bigger question is, does it happen or does it not? It's always gone to the wire in the past on these ones. And unfortunately, there's no sign that this time a quick resolution is in sight as yet.
Sandra, thank you very much. Thanks for joining us. Sandra Horsfield of Investec with her perspective on the global economy. Coming up on the programme, we'll get the latest on that US debt ceiling debate. Terry Haynes joins us, Pangea Policy Founder. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Mr. President, when is the debt meeting with the leaders?
In about 10 minutes.
Seriously?
They're holding it up.
When is it actually happening, sir?
We're working out right now the exact time.
Will it be on Tuesday? It's been reported it'll be Tuesday.
I think so.
President Biden there taking questions from reporters during his bike ride yesterday, indicating more debt ceiling talks could come as soon as tomorrow. Joining us now to break it all down, Terry Haynes, Pangea Policy founder. Terry, a pleasure to have you on the show. Thank you for waking up early for us. You're sitting at a 40% default likelihood. That makes me very, very nervous. But Terry, we've been through this iteration over and over again in the past few decades. Why is this time different?
Well, I think all you can do is deal with what we have in front of you, and what we've got in front here is a situation where we know that the supposed X date is only a few weeks away, and we've still not got full engagement from the political negotiators here, with only a few weeks to go. So that greatly increases the possibility of some sort of mistake. And on that, I think I broadly agree with Jamie Dimon, who pointed out the very same thing and called the possibilities catastrophic. So, my base case is that this gets resolved, but where we are today, I think, is in a very delicate moment. And what I want markets to understand today, too, is that the likelihood of this getting resolved this week, I think, is very low. President, as you just ran footage of, says that they're likely to meet again Tuesday. That may be, but at the same time, Biden's off to the G7 immediately after that. So the opportunity for some sort of resolution this week is very low, which, again, heightens the possibility of a mistake.
And as a consequence, heightens the volatility as well, a little over 2 weeks before we hit that early June X date. Terry, what are the bendiest part of the deals, for lack of a better term? Where is there kind of give and take when you look at the nuts and bolts of the actual agreement?
Well, there's, the things are very soft on any possible component. There's no agreement, as far as anybody understands, about how long the debt ceiling would either be raised for or suspended for. We've had suspensions in the past. Nobody understands whether or not the administration is interested in accepting the House proposal to roll back spending to fiscal 22 levels. Nobody understands how porous or how strong a spending deal is actually going to be. Remember, in the United States, spending deals don't happen really until the fall or winter. And one thing I've pointed out is that there have been delays of 3 months and 6 months in the last 2 fiscal years just on spending deals alone. So the possibility of continuing to string this out for months to come is not a small one either. Right now, there's not any real understanding of how strong a deal is, what its components might be, or for how long it'll last. So all those things are additional worries for markets, I think.
Terry, good morning. If we do see attempts to forge some kind of deal before the 1st of June, we still have 15 days to get there. And I wonder how you think the politics in that scenario would play out to sort of force heads together. I mean, is this something we're going to be talking about on the 29th, the 28th, 29th, 30th of May, you know, leaving it to those dates later in the month before we get any kind of resolution? And I wonder what role the markets play here. If we did see a sell-off in stocks, would that focus minds in Washington?
Yeah, I think, well, you know, I think minds are concentrated here, but on this, but at the same time, you know, work expands to fill the time allotted, and they understand that an X date is early June, so therefore they've got the rest of May. So to answer your last question, yeah, I still think we're going to be talking about this at the very end of May, and there's likely to be some sort of crunch time. Markets also need to understand that even if there is some sort of deal between the president and congressional leaders, the congressional leaders and Biden himself still need to go sell this to their parties, and there are factions within those parties. There are centrists in both parties who really want to solve the fiscal issues as well as the debt ceiling issue and bring back some stability to the markets. And there are folks on kind of the progressive left and the conservative right who were going to be jockeying for advantage with whatever issues they're interested in up until the very last minute. So we're in for a very bumpy ride here between now and the 1st of June.
Are you focused, Terry, then on meetings between members of staff who can go over the details, trying to find areas of convergence and agreement and make deals? Or are you looking at the main players, the principals in this, and saying it's only they who can effect real change here?
Well, this is a declaration against interest as a former senior staffer, but I got to say that anybody that thinks that staff meeting amounts to progress here is hugely naive. The only people that can make this deal in the end are the principals. And, what staff are doing is right now is really coming up with parameters for how deals might get resolved. If we want to if we want to cut back spending here, or we want to cap growth there, exactly, what are our options? How do we do that? That's all important work, but only the principals can make this deal. This is not a staff-driven deal.
Terry, what does the contingency plan actually look like? Our star Washington reporter Anne-Marie Hordern had asked Janet Yellen this very question, but whether if we do hit that X date, does the U.S. only then pay parts of their debt? What is the thinking in Washington? What is the contingency plan?
Well, I'm, in part because I'm informed by Anne-Marie's interview with Secretary Yellen. They don't have a firm contingency plan. I think what can be said is that they have a variety of ways in which default scenarios can play out. They haven't yet chosen which ones they want to trigger. They haven't presented that to the president. If I remember Secretary Yellen, I think she said that they never did present those back in 2011 or 2013 to the president. So, they clearly want to wait quite a long time before they make a decision about what needs to happen and when.
Okay, Terry, thanks very much. Terry Haynes of Pangea Policy, thank you very much for joining us. Thoughts on the debt ceiling this morning. Now, coming up, it is the largest ever transaction in the gold mining industry. More on Newmont's deal to buy Newcrest next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Now let's take a look at the things that are in focus for us this week. Today, Raphael Bostic will be speaking with Bloomberg's Michael McKee. That's at the Atlanta Fed's annual Financial Markets Conference. Then on Tuesday, we get China's key economic data, including retail sales, industrial production, and fixed asset investments. And we also get retail sales out of the United States. That could be the real data focus of the week. And Home Depot kicks off the retail earnings parade, so a lot of focus on the consumer stateside tomorrow. On Wednesday, we'll get the latest Eurozone inflation figures, and Bank of England Governor Andrew Bailey will be speaking at a British Chamber of Commerce event. On Friday, the G7 leaders meet in Hiroshima in Japan, and the Fed Chair Jerome Powell and former Fed Chief Ben Bernanke will sit down to offer their perspectives on monetary policy and answer questions at a conference taking place in Washington. Kriti?
That's going to be an interesting conference for sure. I wonder what Ben Bernanke thinks of all this. I want to take a quick look at the stocks we're watching in the pre-market trading in the United States, because some of it is news flow, some of it is actually technicals. I want to kick it off with Apple shares here. AAPL is your ticker for our radio audience, higher by about 0.2%. Now look, it looks like a small move on the surface, but the reason I bring this to the attention of our audience and to you, Anna, is simply the idea that on Friday, the market cap of Apple actually surpassed that of the entire Russell 2000 small cap index in the United States. It speaks to just how large Apple has become. And as we talk about that defensive bid coming off of those debt ceiling talks potentially into tech or into commodities, Apple is one of those beneficiaries. I'm going to get that word right. Higher by 0.2%. So certainly keep an eye on that. It's not the only one moving, though. Some M&A news in the works as well. ONEOK at top of the mind to buy Magellan Midstream Partners for about $19 billion, an energy pipeline deal that is actually going to make it one of the key players in the pipeline industry, starting to compete with the likes of Kinder Morgan or Williams. This is a big deal when we talk about just the kind of competitive landscape of the pipeline space. ONEOK shares down just shy of 6%. Newmont Mining is the other one, of course. It is looking to buy Newcrest Mining. This is a really big deal when we talk about simply consolidation in the gold space as we talk about record high prices. For more on that deal, we're joined by Bloomberg M&A reporter Dinesh Nair. What is driving this interest, Dinesh? How much of this has to do with the supply and demand story you're seeing in gold right now?
Well, thanks for having me. I mean, it's clearly industry has been quite curtailed over the years. You know, gold miners are finding it increasingly, and prices are at record levels. So I think scale has become like a really crucial factor in the gold industry. So we've seen that over the years with a number of deals, whether it's like Barrick's pursuit of Randgold and the latest deal as well. Just on this particular transaction, yes, it is a gold transaction. It's the biggest gold mining deal to date, but then Newcrest is also a big copper producer. So you're seeing that as Newmont using the deal to also diversify a little bit away to copper.
Yeah, Dinesh, good morning. I was going to ask you what is driving Newmont Grant's interest in Newcrest specifically, and this is very much about gold, but also, as you say, copper. So is this something about the new economy and energy transition as well?
Yeah, big time. I think what we're seeing in the mining industry today is this huge demand by the miners to diversify into metals which are seen as friendly, to renewable energy and energy transition. So we've seen a wave of deals. There was Glencore's pursuit of tech resources and BHP's deal for OZ Minerals. You see in all these deals, I think copper is a very important commodity that is seen as a metal which is potentially going to propel the industry's push towards renewable energy. So I think we've seen a very busy time in mining M&A, quite contrary to what we're seeing in M&A overall.
Yes.
I think the driving factor has been the urge to get supplies of metals which are keen.
Yeah, absolutely. I pull up the MA function, the MA Go function on the Bloomberg terminal. It tells me that mining basic resources is one area of green year on year when it comes to M&A. Other areas not so positive. Thanks very much to Dinesh for joining us. Been both Dinesh and I on the M&A stories and the mining sector within that. That is it for early edition. Surveillance is up ahead. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of a family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
Is it the OK is getting ready to make
This market, I think, is trying to figure out, do we get some sort of soft landing? Does this work out?
A lot of humility is in order as we go into the next few months.
We are seeing some elements of disinflation. Problem is, it's not happening very quickly.
There's a long precedent for these cycles simply taking a long time. What we expect is that when the Fed does cut, they are going to be cutting fairly aggressively.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get your week started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market just about positive by 0.3%. Talks will resume on the debt ceiling tomorrow between the Speaker of the House, Mr. McCarthy, alongside President Biden, TK, and some soothing words over the weekend as well from Brainerd over the economy, Tom, on the National Economic Council Director saying this: the staff is very engaged. I would characterize the engagement as serious as constructive. That's the good news.
That's exactly the process, and the key word here is staff. This is the people doing the really tough negotiations. What do we believe in? Where do we fit? What's most important to us? And they're going to, excuse me, I'm gasping over the debt ceiling. No, I'm gasping over the debt ceiling because nobody cares about it. But the answer is it's going to get done. And I would suggest, John, it's just a normal process to get there. I have to predict they'll kick the can down at the road.
We're hoping that we are making some progress. I think the president said over the weekend, Lisa, that we're not at the crunch point just yet. Secretary Yellen spoke to the team over in Japan at Bloomberg. I thought that was interesting, that we think the ex-date might be in early June. We could get an update in the next couple of weeks. And there is a risk here, I think, a feeling amongst a lot of people that perhaps that comes forward a little bit.
Well, the tax receipts were not particularly as fruitful as people had expected. $250 billion shortfall in terms of the tax revenues, which really creates a bit of a crunch here and a bit of an ambiguity. I will say, can we just point out the negotiations are continuing, making progress. They have until Wednesday when President Biden heads over to the G7 meetings. And then after that, everyone's on vacation forever because that's what happens in Washington, D.C. So they got to get something together.
Vacation forever,
vacation
TK.
days is a legit. Do they do that in England? John, do they do that in England?
They do a little bit of that. It doesn't feel like they do anywhere near as much as they do down in Congress.
There's a tradition here because they had to travel, John, and they all lived in the same hotels together. This is 150 years ago. There's a huge American tradition of they're literally on horseback or carriage all over the country, not as big to California, traveling. And that's where the schedule came from.
And they've stuck with it.
Stuck with it,
Even though you can fly
Even
now.
though,
I was about to say, they still
it's true.
You can fly now, but it's still vacation forever.
Well, you know, it's a nice gig if you can get it.
Okay, wonderful. Wonderful start to the week. Let's get straight to the price section.
You don't want to continue this?
Your equity market. I'd forgotten where Brainerd worked for a moment. I was Federal Reserve.
We haven't
government.
hold on.
Haven't heard from her.
We haven't heard from her. And I
Agreed.
thought that it was interesting, and we heard from her, and it was very
agreed.
Politically constructive.
Didn't hear much from her when she was at the Federal Reserve either. Dare I say we've heard too little of her so far at the administration. You've both gone quiet because you know where I'm going with this.
Yes.
We'd like to hear more from you. Deese played this game for a little while when he arrived in the administration at the very beginning. Very, very quiet, didn't really talk much. I don't think that's on. Not in a moment like this one.
We want to hear more from Dr. Brainerd because of her academic chops. Mr. Deese was very good and got better on the job, which is a rare accomplishment in Washington. But people, whether they agree or disagree or they want to, you know, there's like Miss Congeniality, she's Miss Cumulative.
Oh, I don't want academic thought leadership, TK. Forget that nonsense. I want to understand about policy.
That's what you're going to get.
I want to understand about policy. She's in a really important position in this administration now.
And she gave a little sense of that over the weekend. And I think that's the reason why there is this optimism, because she said that talks are actually quite constructive. And that really goes against this feeling that President Biden isn't going to negotiate unless everything is off the table in terms of really defaulting.
We should restart the show. Here's your equity market on the S&P 500. Positive 0.3% on the S&P, and the bond market yields a little bit higher. Lisa, by a basis point, your 10-year 347.94. Friday, you Mitch. Wow. Market mover.
It was a market mover because of the 5 to 10 year expectations surging to, I believe, the highest going back to 2012. This is the concern here. Are we seeing inflation becoming unmoored? Not necessarily seeing some sort of concern in markets. What we're looking for today, 8:30 a.m., we get U.S. Empire State Manufacturing Survey. Do we see something roll over here in a more meaningful way? Last week we saw, or last read, last month, we got a surprise to the upside, but we are seeing economic data slowly come in a little bit lower than expectations. At 11 a.m., a view on credit card spending ahead of retail sales tomorrow, and then Home Depot as well as Target and Walmart. The New York Fed is going to be releasing their first quarter household debt and credit report. I'm looking for total credit card outstanding. Basically, how much are people borrowing to keep this spending spree going? And at 2 p.m., our own Michael McKee will be having a conversation with Atlanta Fed President Raphael Bostic from Amelia Island in Florida, which is gorgeous. And they're having a conference where they're going to talk about, you know, the state of play, where we're at.
Nice. You don't sound jealous at all.
It's so pretty.
Sebastian Page, head of global multi-asset and CIO at T. Rowe Price, with us around the table. Good morning, Seb.
Morning.
We'll catch up with Stuart Kaiser at Citi in about an hour from now. He put out a note yesterday evening, and these are the numbers, the tail of the tape over the last 3 months. SPX at 1%, NASDAQ 100 up 8%. The Russell is down 11%. The equal weight S&P 500, 6% lower. He called it a very odd pattern. Can you square that circle? Can you make that work for us? Can you explain it?
Well, it's a continuation of what we've had year to date, a concentrated rotation into growth relative to what the market is starting to perceive as a peak rate environment. Right now, we're just talking about the debt ceiling. I think that's, I'm not sure, Tom, you actually want to talk about it, but it is important. And what I'm interested in is the difference between how the stock market is reacting to that debate versus the rest of the markets, the CDS and the bills. And there's a huge difference there, Jonathan.
I look, Sebastian, at where we are on a Monday morning. You know, we sort of started the show clumsy because it's a really clumsy time. There's some international stories we'll get to. But the big one for me is if I take a 3-moving average log study, we're at stasis. Those moving averages have come in to a shocking point of 0.2%, 0.0024 differential in those rates. What do our listeners and viewers do when you have a convergence of this level?
You know, I'm leaning towards the bond market view that we're in for some volatility. The VIX is sort of low, and then you look at the CDS, which you've talked about on the show, on the U.S. government. It shows that the default risk for the U.S. is right now, according to the market, higher than Brazil's, Mexico's, Greece. It's twice what it was back in 2011. And you've talked about the T-bills, too. The 1 month is yielding 80 basis points more than the 2 month. No one wants to hold the T-bill into the debt ceiling. And the VIX is low, and the market is doing okay.
Okay, so are you saying that the market should sell off? That basically stocks need to sell off in order to really represent the risk that you're seeing represented everywhere else in the market relating to the debt ceiling?
I think the market could sell off. It did in 2011 by 17%. The interesting part of this is that it could be a tactical buying opportunity. You know, the next 12 months in 2011, the market was up 29%. So I think short term, tactically, could become a trade. Longer term, I think this debate, you've talked about this as well, hurts fiscal spending, or you pull back on fiscal spending, you issue more bonds to replenish the Treasury's general account. That puts upward pressure. So it's one more negative for the economy.
Okay, the problem with this argument, and this is why I think we're all frustrated and kind of in this muddle, is because that's what everyone says. This could potentially be a decline, which will be a buying opportunity so we can all get in, which is the reason why you're not seeing anything come down, because everyone's going to hang on tight until we get there. Where is the conviction in that risk-taking kind of proposition, whether it's to sell or whether it's to buy at a time when Stuart Kaiser is talking about one of the most painful volatility versus downdraft that you've seen going back to the 1980s?
Yeah, look, to be clear, in our asset allocation portfolios, we're underweight stocks, not by a lot, but we are positioned for pullbacks in markets. We take a 12-month horizon. I think of this whole situation as the 4 horsemen of a recession, right? You have the inverted yield curve, which is here. You have plummeting PMIs, which on the manufacturing side is down 17 points. Then you have credit tightening, the discussion on the sluice. That might be the new surveillance drinking game, how many times you say sluice.
Oh, God.
And then you have the 4th horseman, which is unemployment, which is still not here. You're still not seeing it in the data. So you put it all together, price earnings ratio on the S&P 500 at 18. Again, I'm an asset allocator. In our committee, we have both bond and stocks investors. Right now, we're leaning towards the bond investor, a slightly more pessimistic view.
So what you see on the horizon, better for bonds, bad for stocks. When you say underweight equities, what does that mean for you and T. Rowe Price?
So on our asset allocation portfolios, we have some tactical levers we can pull. We're pulling back on equities relative to bonds and putting some of it in cash, you know, because the yields on the short end of the curve are more interesting. So we're overall underweight stocks. The interesting part of this is that, you know, when you went through the market returns year to date and mentioned that small caps were not doing as well as large caps, for example. There are opportunities where I think valuations are pricing in a deep recession, hard landing scenario. Think high yield bonds for the total yield perspective, and think quality small caps if they're managed by a skilled active manager. I think those are opportunities to lean back. So Jonathan, on your question is, what does it mean? We're underweight stocks, not by a lot because we tend to be invested for the long term.
Yeah.
We're adding risk back in the portfolio through very, very contrarian positions here.
Well, let's do a little bit more on that. The equity allocation within that underweight. Contrarian right now would be the regional banks. Are you leaning into any of that at all?
We're overall close to neutral on regional banks. It's all about selection. I think this is when you want skilled active management involved. On the small cap side, we like quality small cap, so that might include some regional banks, but not all.
Interesting. Seb, this was fantastic. Thank you, sir. Sebastian Page there of T. Rowe Price. Underweight equities, Bramo, but when you dig into it, selectively taking some risk there. Some people might say some big risk.
Some big risk. It seems like everyone's all in PNC. This is what I'm hearing. I'm sorry, I don't know what your position is, but I'm just seeing this sort of feeling right now.
Don't put him on camera right now.
Well, it's true. I mean, what I'm hearing is that people are going for the bigger regional banks, and they're sort of, parsing through all of this. This just shows that people want to take risk, even if they're putting more money in cash, which is the reason why some people think that there could be a painful bounce upside to the upside.
Well, I think what you're suggesting with the debt ceiling in mind is that this needs to get worse before it gets better. And if it gets worse, that is the solution for it to get better. And ultimately, that's the buying opportunity, which is why you end up in this situation where you just go nowhere and you're playing this game of chicken, this blinking contest with the S&P 500 at the moment.
It's really fun.
You're loving it, aren't you?
In the 14 stories this morning, a small matter.
Sure.
The regional banks, once again, can't get a bid. It's not drama, but PacWest can't get a bid this morning. That sort of surprises me.
Regionals last week down more than 6%. S&P 500 down by something like 0.3%. Clearly just shaking off the drama elsewhere. Stuart Kaiser of Citi, I mentioned him a little bit earlier. We'll catch up with him in the next hour in about 50 minutes' time. If you're just waking up this morning, good morning to you all and welcome to the programme. This is Bloomberg Surveillance with equity futures positive 0.29%.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. In Turkey, there could be a runoff in an election that's testing President Recep Tayyip Erdogan's 2 decades in power. Preliminary results show Erdogan with a lead of more than 2 million votes. But that's not enough to avoid a second round of voting. A runoff would pit Erdogan against Kemal Kılıçdaroğlu, who has the backing of the nation's broadest ever grouping of opposition parties. In Thailand, a big victory for pro-democracy parties in Sunday's parliamentary elections, and that sets up the biggest challenge to the royalist-backed establishment since the military seized power in a coup nearly a decade ago. The Move Forward Party wants to change a law that restricts criticism of Thailand's powerful monarchy. President Biden and House Speaker Kevin McCarthy meet again this week to try to break the impasse over raising the debt ceiling. Other congressional leaders will also take part in Tuesday's meeting. If the borrowing limit isn't raised, the U.S. could default on its debt. McCarthy has said any change to the limit is contingent on a budget deal. In a big transaction in the oil pipeline business, ONEOK has agreed to buy Magellan Midstream Partners in an $18.8 billion cash and stock deal. It would create one of the largest oil and natural gas pipeline operations in the U.S. The price represents a 22% premium to Magellan's closing price on Friday. Gold giant Newmont has agreed to pay $19.2 billion to buy an Australian rival, Newcrest Mining. That consolidates its position as the world's largest bullion producer. The deal will also boost Newmont's resources of copper, a metal where demand is expected to outpace supply. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
break Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Bloomberg has the Fed coverage you're looking for. Today, Bloomberg's Mike McKee sits down with Atlanta Fed President Raphael Bostic.
There are just a lot of things to reflect on in terms of where the economy is.
Then on Tuesday, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook.
And an interview with Chicago Fed President Austin Goolsbee.
We should gather further data.
It all starts today, right here on Bloomberg, your global business authority.
What I've learned a long time ago, and you know as well as I do, it's never as good to characterize a negotiation in the middle of a negotiation. I remain optimistic because I'm a congenital optimist, but I really think there's a desire on their part as well as ours to reach agreement. I think we'll be able to do it.
Sounds like a tough bike ride over the weekend for the President of the United States over in Delaware, TK, yesterday.
Made a joke at the White House dinner about how often he's there. Like, it's like get out of Dodge at the White House. I don't know if it's get out of Dodge Thursday or get out of Dodge Friday. And in his defense, many other presidents have done the same thing.
Okay. Bramman?
I don't know. We're doing it all wrong. We should be able to take off every other week. No, but in all honesty, everyone else is doing it in Washington, D.C.
Who else is doing it?
Congress is about to go back.
Oh,
Nick
true.
Bloom,
True.
well-
They're going to take a nice long vacation as well.
Nick Bloom of Stanford is on the high ground on doing the math of work from home. And, you look at President Biden, I guess he's doing work from home in Delaware. But it's simple. The tech people are leading the way. And then the CEOs, the C-suite officers are right behind them.
Are we doing a work from home
And then they
segment?
said, we're not
Checking
doing
out.
work from home. We're not doing work from home. We're staff. We're staff. That's what
We're
Nick
staff.
Bloom, but
They work
Professor
around the
Bloom
clock.
would call us.
Nice.
We're staff. What we're going to do right now on a really odd Monday, and I think the odd Monday says, when's retail sales tomorrow?
Tomorrow, yeah.
That's like the next big hurdle here for me. Futures up 14 and all is try to get some of all the chaos for you. We can do that with Julie Norman. She's co-director of UCL Center on U.S. politics, and there's a laundry list of things to talk about. I think we'll get to the debt ceiling, but Professor Norman, I just want to talk about how all of a sudden the idiosyncratic is not idiosyncratic, and that we're going to rationalize this morning as idiosyncratic Monday, and maybe it's Argentina, total chaos, won't go into the details, Thailand, an election, Turkey, an election. As you study this, when does the idiosyncratic, how does it not become idiosyncratic? Are we there?
Well, Tom, I think this is kind of more common than we think. I mean, all the time we're having changes happening around the world in ways that I think end up having later ripple effects, and some we just pay more attention to than others. I think this week, many in the U.S. and really in the U.K. and across NATO are watching Turkey's elections very quickly, or very closely. Those will likely be going to runoffs later on this month. Turkey, of course, being a key member in NATO, and a shift from Erdogan's power really could change how that relationship looks in terms of Turkey's relationship with Russia, with Ukraine, and also with expanding NATO. So I think that's where a lot of eyes are on right now. So.
Are we no different in that it's a measurement between autocracy and democracy? And is that where we're heading in this election, is a study of autocracy and democracy in the United States of America? It's over there, it's distant, it's removed until it's not.
Well, that's exactly right. I mean, I think Biden obviously has used that language a lot, of kind of using this democracy versus autocracy kind of dichotomy. But in fact, in many countries and many regions, we've seen this playing out for quite a while. It's often a mix of both. You mentioned Thailand before. That's a place where we've seen different waves of protests and uprisings to push for democracy. We saw that pro-democracy vote this week. So I would say this kind of thing is constantly in flux, and I think Turkey is a kind of a prime example of a place where we've seen authoritarianism creep further in against what was a democratic and still is a democratic country. But even within that, how you can see authoritarian tendencies, take shape and take control.
How does this color the debate, Julie, heading into the G7 meetings, which happen, I believe, next weekend?
Yeah, so the G7 will be in Japan this year, which is notable, I think, as the U.S. and most eyes are looking towards the Pacific, looking towards China. So I think we may hear a bit more pointed language around China in particular, some more pointed language, at least the U.S. is pushing for, around China's economic coercion and trying to get a little more sense of synergy across the G7 members of what that might look like. Usually these joint statements are very light touch, but I would say the summits are important for keeping allies on the same page, especially at this moment when China, Russia are continuing to be obviously big questions, and the synergy of the G7 and other close partners are really going to be key in how everyone moves forward on these.
There's some discussion, Julie, about President Biden not going to G7 if we cannot get some sort of progress on the debt ceiling, on the debt debate, which is going on in Washington, D.C. How likely is that, and what is the potential implication of that?
Yeah, so it's possible that Biden wouldn't or would maybe go virtually. My understanding is that right now he is still planning to go. Usually Biden does well in these multilateral settings, especially in trying to, again, get this sense of cooperation across allies. So I think this is kind of a point that he likes to usually be present on the front lines for. With that said, everyone's very, clear on the reality of what's going on in Washington. My sense is that, there will be meetings earlier this week. I don't think anyone's expecting a massive breakthrough tomorrow. And so there could be just business that's closed on that after the G7, of course, if we're lucky and if negotiations keep going the right way.
We talk about how there's complacency in stock markets. That's what we were just talking about with Sebastian Page of T. Rowe Price. And other people are saying the same, that no one's going to blink here in the markets because we've seen this story before. Does it feel different to you that this is somehow a more perilous debate and more prone to having an accident?
Yeah, I mean, it's such a tough one because, as you said, we kind of have this, well, they're going to figure it out. They always have in the past kind of sense. And I think, as your other guests have said more eloquently, that's keeping markets somewhat calmer than maybe we would expect in some ways. But at the same time, I think our politics is very different now than it was even, in 2011, the last time we really saw this kind of face-off, in that even if you have a strong negotiation and breakthroughs between Biden, McCarthy, and the congressional leaders, can they actually get their caucuses to go along with it? And can we actually get something passed? And I think that leverage and leadership looks a little bit different than it did 10 years ago, just because of the polarization that we see today. So it is different in that regard. I don't think that means it's not going to work, but there's just still a lot of unknowns and how this is going to play out differently than it did in the past.
Julie, wonderful to get your perspective on an important topic. Julie Norman there of the UCL Centre on US Politics. Things are different this time to a certain extent, but Tom, the outcome at the moment that most people forecast remains the same.
Yeah, I think on the set of issues we have, that's entirely true. And that's why we get into this odd Monday that we're in with the churning. And again, I go, John, to the convergence in the equity market, which is just the absolute collar, the absolute range bound, because we don't know which way we're going to cut, waiting for things to turn out like we perceive they're going to turn out, says who.
Well, let's talk about the differences. I think what Julie was alluding to there was Speaker McCarthy and the difficulty he might have getting any agreement through the House, Bramo. He did something that I think was still something, which was a number of weeks ago, get an agreement through the House. But whatever they agree between themselves, the president, him, and other leaders in Congress, that might be more difficult.
There are two conversations going on in any room. What practically could be done in terms of getting some sort of agreement, and then how they can then go and come up with political wins to their constituents to basically show that they didn't get taken advantage of. And that's what you're going to be seeing on both sides. Basically, you're going to have the actual document of how we progress with good fiscal policy. That's sort of the lesser discussion. And then the greater discussion is, how do I not get egg on my face? And that's sort of what we're feeling. And Kevin McCarthy more than anyone, because he's trying to keep that unity within the House.
Who wins out of this?
Nobody.
Who wins out of this, Tom?
I hope that we win out of it some form of commission. It will never be apolitical, but the way we win is a commission out of it that is mandated from the beginning to get something done. I think I'm dreaming, but that would be the win.
To me, the win would be if people started to realize that they want it to be more functional and they want fewer talking points and more to actually dig into the details and understand what fiscal responsibility means and what you want to fund and what you don't want to fund, how to create more streamlined programs, create efficiency, sort of a more technocratic approach. I think that would be really great.
Both of you sound so hopeful. You're both dreaming. But that was nice. That was nice. Yeah, that was meaningful. That was nice. That was really special.
Really?
That was really special. Lindsay Piexer of Stifel joining us shortly. On the S&P 500, positive 0.4%. Retail sales tomorrow. We get some earnings from retailers through the week. Then on to Chairman Powell later this week as well. So tons of Fed speak in the mix too. From New York, this is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Welcome to the programme. Getting your week started with equity futures just about positive on the S&P 500. Some soothing words over the weekend around the debt ceiling. Talks are constructive. We're moving forward. We'll have talks tomorrow with Speaker McCarthy and the President of the United States before the President jets off to Japan. Look out for that. Your equity market positive 0.4% on the S&P, on the NASDAQ. Positive 0.25% into the bond market, 2-year, 10-year, 30-year. Looks like this on a 2-year. Yield's just a bit higher across the curve by about a basis point. Just short of 4% on a 2-year, 399.78. I just want to finish on Europe and the euro. Euro dollar 108 handle. There we go. 108.73, positive 0.2%. Mislav Matejka of JP Morgan and the team making some headlines over the last week, reaffirming their stance this morning and saying this: the activity upswing seen around the turn of the year, which was helped by the falling gas prices in Europe and China reopening, unlikely to transition into an acceleration in the second half. TK, they say this: we believe the time has come to now close the trade of overweight Eurozone versus the United States.
That's a guesstimate on it. And, everybody's got a different opinion out there. What I would suggest is I go back to nominal GDP, and I just don't see a nominal GDP. If you get some form of disinflation, whatever it is, a little bit, teensy-weens, maybe a substantial amount of disinflation, nominal GDP comes down, and that makes everything just harder to do. And is Europe able to do that, frankly, with a war going on as well, than the United States? I wouldn't be so optimistic.
Lisa, there's a bank fade in that long Europe story.
The interesting thing is the actual data is coming in anecdotally, and you've pointed this out, potentially with a bearish kind of tilt to what's going on going forward in Europe. And yet the European Commission came out overnight and they were talking about how inflation is probably going to remain sticky, but also there's no recession in sight anywhere in the Euro region and everything is great. So at what point do you end up seeing the tea leaves like the senior loan officer survey, the sluice of Europe, basically coming out with some negativity?
I thought we already had the slews of Europe, and they were pretty ugly.
That's what I'm saying. I'm referencing that.
I don't know about you, but if I was putting a trade on, I always wait for the European Commission to come out with their forecast.
And then you short it?
Absolutely, and then go the other way. Yes. Bloomberg sitting down with a range of people this week, not on the ECB, but on the Fed. Raphael Bostic, Thomas Barkin, Austin Goolsbee. Great conversations coming up later on through the week. Stifel's Lindsay Piegza weighing in on the Fed's path forward, saying this, Tom: the committee has indicated a willingness to move to the sidelines in June and still may do so. However, the latest price data does not make the case for the Fed. Rather, any decision to pause would be made in spite of the latest still elevated inflation data.
Still elevated. It came in a little bit and the vectors are in the right direction, but yes, still elevated is absolutely where we are. Lindsay Piegza joins us now, chief economist at Stifel. Lindsay, just simple, I'm exhausted by it on a boring Monday in May where we're trying to sort out 8, 9, 10 different threads. How close are we to recession?
I think the Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation. And so this delicate balance has allowed, I think, the consumer to continue to stay afloat, which pushes out our recession call to the end of the year. Now, we do expect a downturn, but that being said, with the resilience of the consumer, Q2 GDP could actually surprise to the upside, leading the first half of the year well above earlier expectations, much more robust than expected, offsetting even if we do see some of that downturn then in the second half of the year.
So if we get a 2.x% economy, fine. How much of America is advantaged by that? And how much of America is really struggling right now? Because I got all sorts of studies from Bloomberg and others that say there's a lot of people out there struggling, including bankruptcy levels. How narrow is this prosperity?
I think it is pretty narrow because when we isolate the consumer and look at how the consumer is spending, much of the factors that are supporting this still positive, albeit significantly reduced level of expenditures are very temporary factors. It's because consumers are increasingly willing to draw down savings, because they're still relying on that last sputtering of state and local stimulus, because they're increasingly turning to credit card debt to supplement their spending. So it's very clear that the consumer is on fragile footing, but they're proving resilient, at least temporarily. And because of that resilience, businesses that were arguably overly optimistic in the first quarter are going to have to reverse course and increase production in Q2, significantly contributing to top-line growth. Or if they don't, and we see a growing disconnect between demand and supply, that will slow the level of disinflation that we've seen in this economy thus far. In either case, this puts pressure on the Fed to continue raising rates.
Why is it bad, Lindsay, to see a slower disinflation and strong growth if that disinflation gets us back to that 2% level?
Well, it's not, but it's predicated on the second part of your argument if it gets us back to that 2% level. The problem is the level of momentum, that disinflation momentum, is very, very minimal, well under what the Fed had anticipated at this point in the cycle. And if, in fact, the Fed stops or moves to the sideline and allows inflation expectations to pick up, as we saw in the latest UMich survey, that could reverse some of this improvement. And so the pace of disinflation is not necessarily quite as important as the market buying into the Fed's resolve to continue along the pathway so that that level of disinflation leads us back to 2% target.
Lindsay, I was really struck by a lot of the retailers' reports, not the ones that we're going to get this week, obviously, but the ones that have already reported, and how much of the price increase they're passing along to consumers. They're actually increasing their profits, the profit margins, for the first time in about a year and a half, if you take a look at what's reported so far in the S&P 500. Does this seem sustainable to you, that basically consumers are not pushing back and that pricing power is so extreme for some of these companies that they can keep just jacking prices up even well beyond what their production costs are?
Well, it's interesting because when we look at the producer price increases, we see that costs, yes, of materials, inputs are still going up. But to your point, businesses are passing on that and more to consumers. Now, again, consumers are proving resilient. They are able to tap into some stored wealth, allowing businesses to pass on that cost increase. And if you look at the surveys, consumers are increasingly willing and accepting of that level of inflation. But going forward, it's all going to come down to that stockpile of wealth and the ability for the consumer to make purchases in the marketplace. At some point, those savings, that wealth runs out, and businesses won't be able to pass on that cost increase without a significant loss of market share.
So translate that into retail sales tomorrow. Take it right down to the acuity of what we're going to see tomorrow in retail sales.
Well, when we look at this on a monthly basis, what we've seen is that consumer spending is increasingly volatile. Consumers are dramatically shifting the goods and services in their basket, something that they do when they're increasingly concerned about their financial footing. And so we do expect that volatility to be maintained going forward, albeit for this week's report, we do expect an uptick, a positive monthly increase. But again, looking at this on a year-over-year basis,